Hello, hello. Good morning once again, distinguished guests. Good morning, innovators. Good morning, regulators. Good morning, fintech leaders. And good morning, Africa.
On behalf of Intermark Consulting, our sponsors, partners, exhibitors, delegates, and speakers joining us from across Africa and beyond, we would like to officially welcome you to the Digital Pay Expo 2026.
For 25 years, Digital Pay Expo has served as one of Africa's most influential platforms for conversations shaping the future of payments, banking innovation, financial technology, digital commerce, and financial inclusion. Today, as we gather under the theme, Building a Unified African Payments Market, we're not simply discussing technology, we are discussing how to convert and connect over 1.4 billion Africans through seamless, secure, and intelligent financial systems.
Over the course of the next 2 days, we will hear from central bankers, policymakers, payment innovators, technology pioneers, financial institutions, investors, and industry leaders who are helping to shape Africa's digital financial future.
So whether you're joining from Nigeria, Kenya, Ghana, Uganda, Rwanda, South Africa, Cameroon, Egypt, Europe, Asia, or the Americas, you're welcome. Today, we explore the ideas, partnerships, and innovations that will define the next chapter of Africa's digital economy. Ladies and gentlemen, welcome to Digital Pay Expo 2026.
Now, to formally welcome us to this landmark gathering, it is my absolute honor to invite a man whose vision and leadership have helped sustain and grow Digital Pay Expo into one of Africa's leading fintech platforms. Please join me in giving a very warm welcome to the Managing Director of Intermark Consulting, Dr. Adeyinka Adeyemi.
A few years ago, just coming out of COVID, a woman in the local market that sells tomatoes called me while we were implementing agent banking sensitization for the United States Africa Development Foundation, USADF, and told me a story that I would like to share with you this morning. She said to me, she sells tomatoes. When she gathers her proceeds for the day, she wraps it in the wrapper, in a piece of cloth, and takes it back home, puts it under her mattress. One day, her proceeds for one whole month got stolen by a burglar who broke into her house and took one clear month of proceeds away. She was distraught, didn't know what to do, and she went to narrate the story to her colleagues in the market. And this young man approached her and said to her, "Why don't you try mobile banking?" Mobile payment, as it were, at the time. And she said, "No, I want to see my money." After much persuasion, she agreed to try mobile payment, and which she did for another couple of months, and then she saw the benefits. For her, some of the benefits are that she was able to create some structure around her business. She was able to track her sales, track the progress she was making in the business. Over time, her transactions grew and she could see it, and that gave her leverage to be able to access small loans from, some of the mobile payment organizations. Now, that is the story of digital payment and how digital payment impacts lives of Africans and indeed people of the world. I tell this story this morning because sometimes we wonder, why do we gather annually to talk about payments? Payments are important, yes, from the technology point of view, but there's something that we often miss or miss out, which is the fact that through technology, we impact lives. We help people with their livelihoods. People want safe, secure, and easy lives of convenience, which basically is what digital payment represents. The story of this woman today resonates across Africa, where millions and millions of businessmen, businesswomen conduct their transactions using digital platforms. Why is this important? Number two is that story should never be allowed to get repeated on the continent. The reason is the advancement we're seeing in technologies, particularly in the area of artificial intelligence, in the area of robotics and machine learning, and the value that those transformative technology brings to the lives of our people. Now, if you fast forward to what we see as the future of payment, you can tell, therefore, that Africa is definitely on a journey, and that journey, just like Goldman Sachs had predicted, that Nigeria, for instance, again, Nigeria, I repeat, representing the rest of Africa, will be the 5th largest economy by 2050, even though that report then moved it to 2070 at some point. Now, at Interbank Consulting, we are firm believers of those sort of predictions with respect to Africa, because we understand the landscape of payment, we understand the landscape of business transactions, and we understand the impact that technology brings to our people. And therefore, this morning, we are gathered once again, like we have done in the last 25 years, to discuss, to have conversations around digital payments. This year, the theme is seamless digital, fostering Pan-African market expansion in the area of AI. How do we not replicate the story of that woman consistently on the continent, like I said earlier, with the advent of technologies like AI? At this gathering this year, we're going to explore those potential opportunities. And to do that with us, we have gathered a whole bunch of experts from across Africa and indeed from around the world who will be sharing some thoughts, sharing some experiences with us with respect to how this can be brought to life. I therefore have the honor and privilege to welcome you to Digital Pay Expo 2026, where we're looking at the transformative nature of technology and how seamless digital can help us to build or to foster an enabling environment that can help us with market expansion across the continent. You're welcome. I'd like to also, on behalf of our partners, our sponsors, and the people behind the scenes, Intermark Consulting, the team doing all the work within Intermark Consulting behind the scenes. We have some of our directors here as well. Assure you that even though the room looks a bit sparse because of the rain, like we say, calm down. Right? Calm down. We have over 2,500 registered for this program. As we speak, we have about 500 to 700 people online, also, watching and listening in to these conversations. And we're here to actually make very serious deliberations with respect to that theme. We have a couple of panel sessions. We have a power panel. The key organizations on this continent are here represented at this conference just to share their experiences and their thoughts with us. So I believe in my heart that we will go back after this conference much better informed and ready to put into action some of the things that we'll be learning here today. Once again, I thank you. A couple of people have traveled from different parts of Africa, from Kenya, from Ghana, from South Africa, from Rwanda, and from the different corners of the north and east and south and west of Africa. We have also people from different parts that are here in our midst. As we kick off this program, I'd like to just leave you with a tiny comment. Get ready. The future of Africa is digital. And that future is here today, where we're going to be shaping the next 3 to 5 years of the lives of our people. Thank you very much. Enjoy your conference.
Thank you very much to Dr. Adeyinka Adeyemi for those insightful remarks and for your continued commitment to advancing Africa's payments ecosystem. So before we proceed to the opening address, I'd just like to invite our distinguished guests who are currently in the Expo Theatre to join us over here. We are all ready for the next conversation. So please, if you are enjoying the demos in the booth, please do join us over and take a seat. And the theatre will be open shortly later on in the afternoon. So, ladies and gentlemen, there can be no meaningful conversation about the future of payments without the participation of regulators who provide the frameworks that inspire trust, stability, and innovation. Now, to deliver the opening address, our next speaker, who is ably represented by the Deputy Director of Payment Systems, is the Director of Payment Systems Supervision at the Central Bank of Nigeria, where she oversees regulatory frameworks and supervisory activities that ensure the safety, efficiency, and stability of Nigeria's payment ecosystem. With extensive experience in banking regulation and payment systems oversight, Dr. Yusuf has contributed significantly to the advancement of digital payments and financial sector stability in Nigeria. Her expertise continues to support policy development and innovation within the country's evolving financial services landscape, and she is ably represented today by the Deputy Director of Payment Systems Supervision at the Central Bank of Nigeria, Chika Ugweze. So I'd like to welcome Chika Ugweze to the stage, please. Thank you very much, sir.
Good morning, everyone. The director has other pressing commitments this morning. She made every effort to be with us this morning, but other challenges came up this morning that she had to attend to. She asked me to read her address and convey her felicitations with this Expo. So let me the voice you'll be hearing will be mine, but it's the mind of the director, Dr. Rekia, that I'm expressing this morning. So good morning, distinguished guests, regulators, industry leaders, innovators, development partners, ladies and gentlemen. It is a great honor and privilege to join you today at the Digital Pay Expo 2026. I wish to sincerely commend the organizers, Intermark Consulting, for their unwavering commitment to advancing dialogue, collaboration, and innovation within the digital payments ecosystem. Over the years, Digital Pay Expo has evolved into an important platform where ideas are exchanged, partnerships are forged, and the future of payments on our continent is actively shaped. The theme of this year's conference, Seamless Digital, Fostering Market Expansion in the AI Era, is a call to action, is a call for us to rethink how we design digital systems and platforms that help to achieve financial and social goals, including economic empowerment, financial inclusion, as well as how to leverage intelligence, both human and artificial, to accelerate growth across markets. We are witnessing a profound shift from digital adoption to digital expectation. It is now an expectation for payments to be fast and secure while being intuitive and integrated into everyday economic life. In the payments ecosystem, users expect that transactions should occur without friction, services should anticipate user needs, cross-border payments should feel as simple as local transfers, then financial tools are embedded into everyday platforms. The ultimate goal is to make financial interaction effortless and ubiquitous in a safe and sustainable manner. Achieving this is not simply a technological challenge, it is also a structural, regulatory, and human challenge, one that requires collaboration across sectors and borders. AI is now the foundational engine driving innovation in digital finance. In payments, AI is transforming customer experience. AI enables personalized financial services. It's also transforming risk management and security. Fraud is becoming more sophisticated, but so is detection and prevention. AI-powered systems can analyze millions of transactions in real time, identify anomalies, and prevent losses before they occur. The CBN is promoting the adoption of AI-powered RegTech tools by operators to enable real-time fraud detection and prevention. AI is also transforming financial inclusion. Perhaps most importantly, AI is helping to expand access by analyzing alternative data such as mobile usage patterns or transaction history. AI enables credit scoring and financial services for individuals and businesses previously excluded from traditional systems. This is where true market expansion should begin, not just by reaching more users, but by empowering new participants in the economy. In Nigeria specifically, but also in other parts of Africa, the opportunity is particularly compelling as we have a young tech-savvy population, rapid mobile penetration, a growing fintech ecosystem, and strong entrepreneurial energy. But we also face persistent challenges, such as limited financial inclusion, as well as infrastructural gaps. This is where seamless digital becomes transformative. Imagine a scenario where a small business owner in a remote Nigerian town can easily access credit and other financial services instantly through an AI-powered platform. Payments across, imagine a scenario where payments across borders within Africa are settled in seconds, and also a scenario where digital identity systems enable secure and universal access to financial services. Building a seamless digital ecosystem. To foster market expansion in the AI era, we have identified 4 critical pillars that we need to focus on. First is interoperability. Systems must talk to each other. Fragmentation slows progress. Open APIs, standardization, and collaborative frameworks are essential. In the payment system, the CBN enforces rules on interoperability to prevent fragmentation of services and platforms. The second pillar is trust and regulation. As AI becomes more embedded in the financial and payment system, trust becomes paramount. As regulators, we try to strike a balance between innovation and protection while ensuring transparency, fairness, and accountability. The third pillar is infrastructure investments. There is need for reliable connectivity, digital identity platforms, and cloud infrastructure, as these are the backbone for seamless payment systems. Opportunities abound in these areas within the Nigerian payments ecosystem. The fourth pillar is talent and capacity building. AI is only as effective as the people who design and manage it. We must invest in skills to ensure sustainable growth. As we embrace AI, we must ask important questions about ethical use of AI. Are our systems fair and unbiased? Are we protecting user data? Are we designing for inclusion, not exclusion? Looking forward, the convergence of AI, blockchain, and digital identity will redefine how value moves across the world. In the future, we expect to see fully embedded finance across industries, autonomous payment systems driven by AI agents, real-time cross-border digital economies. But technology alone will not shape the future. Leadership will. The leaders in this room, policymakers, innovators, business executives, will determine whether this transformation leads to fragmentation or inclusion, inequality or opportunity. The promise of seamless digital is not just about convenience, it is also about expansion. Expansion of markets, expansion of opportunity, expansion of human potential. In the AI era, we have the tools to build systems that are smarter, faster, and more inclusive than ever before. The question is, will we use them boldly and responsibly? Let us commit today to building systems that connect, not divide. Systems that designing technologies that empower, not exclude, creating a digital economy that leaves no one behind. Together, we can turn seamless digital into a catalyst for prosperity in Nigeria. I wish you a productive and inspiring Digital Pay Expo 2026. Thank you for your attention.
Thank you very much. Distinguished guests, ladies and gentlemen, please let's put our hands together for Mr. Chika Ugweze, the Deputy Director of Payment Systems Supervision at the Central Bank of Nigeria, ably representing the Director of Payment Systems Supervision at Central Bank of Nigeria, Dr. Rekia Yusuf. Thank you so much for your insightful opening address. Next on the agenda, we'll have the opening remarks by the Managing Director, CEO, Nigeria Consumer Credit Corporation, Credit Corp. Uzo Nwagba is the Managing Director and the Chief Executive Officer of the Nigerian Credit Corporation, known as Credit Corp, where he leads Nigeria's national drive to expand access to consumer credit and strengthen financial inclusion, with a background spanning finance, development banking, and economic policy. He is widely recognized for his work in building scalable financial systems that improve access to opportunities for everyday Nigerians. Prior to joining Credit Corp, he held senior leadership positions focused on microcredit, investment strategy, and financial empowerment initiatives. An engineer by training with academic credentials from Harvard Business School and Howard University, Uzoma has built a reputation for combining policy innovation with partnerships across banks, fintechs, regulators, and development institutions to create a more inclusive credit ecosystem in Nigeria. He is also regarded as a strong advocate for an economic inclusion, responsible lending, and the use of technology-driven infrastructure to accelerate national development. Mr. Uzoma Nwagba today is unavoidably absent, but is ably represented by the Executive Director, Credit and Portfolio at the Nigerian Consumer Credit Corporation. Distinguished guests, ladies and gentlemen, please let's put our hands together for Aisha Abdullahi. Please keep the applause until she makes her way to the podium. Thank you.
I'm sure you could all tell that that was not me in the picture. Distinguished guests, industry leaders, policymakers, regulators, good morning. It is both an honor and a pleasure to join you today. I would really like to commend the organizers for creating a platform that brings together the leaders and innovators shaping the future of payments, financial services, and digital transformation across Africa. Across the world, AI is transforming industries, institutions, and economies. For Africa, AI presents a unique opportunity to transcend traditional barriers, deepen financial inclusion, and accelerate economic growth. But while technology is evolving rapidly, we must remember to create prosperity for our people. At the Nigerian Consumer Credit Corporation, Credit Corp, we believe technology is most valuable when it expands opportunity and improves lives. We believe consumer credit is more than a financial product. It is a bridge between aspiration and opportunity. It enables people acquire productive assets, invest in education, access clean energy solutions, and participate more fully in the economy. At Credit Corp, we are embracing technology and AI through our effort to build a digitally enabled institution powered by data, automation, and intelligent workflows. Our objective is simple: to make better decisions, serve customers faster, strengthen risk management, and maximize impact. Since commencing our operations, Credit Corp has partnered with over 30 financial institutions, facilitated more than 30 billion in consumer credit, and enabled over 230,000 Nigerians to access affordable financing. Many of these beneficiaries are first-time borrowers, women, entrepreneurs, artisans, and workers who had previously had limited access to formal credit. These achievements demonstrate an important truth. When technology, capital, and the right partnerships come together, inclusion deepens, businesses grow, and economic transformation can be accelerated across borders and at scale. As we discuss AI, digital payments, open finance, and cross-border expansion, we must recognize the immense potential these innovations hold for payments across Africa. Imagine a continent where AI helps people assess creditworthiness, where digital identities unlock access to finance, and where financial services move seamlessly across borders. That future is closer than many realize. However, as we adopt AI at scale, we must ensure transparency, accountability, cybersecurity, and consumer protection. Trust remains the foundation of every financial ecosystem. We must also remember that no single institution can build Africa's digital future alone. Governments, regulators, financial institutions, fintechs, tech companies and development partners must work together to create an environment where innovation thrives while consumers remain protected. As we deliberate over the next 2 days, I would like to encourage us to think beyond technology itself and focus on the opportunities that it can create for millions of Africans. If we provide the right infrastructure, the right policies, the right financing mechanisms, and the right digital tools, there is no reason why Africa cannot become a global leader in inclusive digital growth. The future is not something that we're waiting for. It is something that we're building together. Let us ensure that the future we build is inclusive, trusted, innovative, and beneficial to every African. Thank you for your attention, and may the conversations over the next 2 days contribute meaningfully to building a more connected, prosperous, and inclusive Africa. Thank you very much.
Thank you very much, distinguished guests, ladies and gentlemen. Please, let's put our hands together for Aisha Abdullahi, Executive Director, Credit and Portfolio at the Nigeria Consumer Credit Corporation, ably representing Uzoma Nwagba. Up next on the agenda is we're going to view a short documentary. Earlier, during his welcome address, Dr. Adeyemi was speaking about the journey of the Digital Pay Expo and how far we've come. We've compiled a video, a mini documentary to make you appreciate how far we've come, portraying the evolution of payments in Africa and Digital Pay Expo's contribution to that ecosystem. So do we have the documentary ready? Media, happy viewing.
Africa is moving, not just people, not just goods, but ideas, innovation, capital, opportunity, across borders, across markets, across digital ecosystems. Today, a payment initiated in Lagos can reach Nairobi in seconds. A business in Kigali can serve customers in Accra. An entrepreneur in Cairo can build solutions for an entire continent. The conversation about payments is no longer local, it is global, yet uniquely African. For over 2 decades, Africa's digital economy has undergone one of the most remarkable transformations in modern history. As technology reshaped commerce, financial services evolved from traditional transactions into connected digital experiences. Through every stage of that evolution, one platform has consistently brought together the voices shaping the future. For 26 editions, Digital Pay Expo has served as a meeting point for visionaries, innovators, regulators, financial institutions, technology providers, and policymakers. A platform where industries connect, where ideas are created, and where partnerships collaborate to move Africa forward. Today, the stakes are higher, the opportunities are greater, and the conversations are more critical than ever. Artificial intelligence is redefining how financial systems operate. Embedded finance is integrating payments into everyday experiences. Cross-border payment infrastructure is becoming more seamless. Data is becoming smarter, transactions are becoming faster, and digital ecosystems are becoming more interconnected. Yet, growth demands more than technology alone. It requires trust, compliance, interoperability, regulatory alignment, and a shared vision for the future. Across Africa, leaders are asking important questions. How do we create seamless digital experience? How do we unlock continental trade? How do we build systems that work across nations, currencies, and industries? How do we ensure innovation remains secure, inclusive, and sustainable? These are no longer future questions. They are today's agenda. This is why Digital Pay Expo 2026 matters. Because this is where Africa's payment ecosystem converges. Where leaders gather, not merely to discuss trends, but to shape outcomes. Banks, fintechs, telecommunications companies, technology innovators, regulators, investors, policy architects, and the next generation of digital pioneers. Together, we explore the next frontier of payments, the next frontier of commerce, the next frontier of African prosperity. Every conversation has the potential to influence policy. Every innovation has the potential to transform industries. Every connection has the potential to unlock new markets. Because the future of payments is not being imported to Africa. It is being built in Africa, by Africans, for Africa, and increasingly for the world. As Africa's digital economy accelerates, a new imperative emerges, fostering Pan-African market expansion in the era of AI. Not simply expanding markets, but creating intelligent connections between them. Not merely digitizing payments, but building seamless ecosystems that enable businesses, institutions, and individuals to transact, innovate, and grow without borders. In this new era, artificial intelligence is not just enhancing transactions, it is helping to unlock a more connected, more efficient, and more prosperous African marketplace. For 26 editions, the journey has continued, connecting visionaries, creating opportunities, collaborating for progress. As Africa enters the era of artificial intelligence and seamless digital ecosystems, the mission remains unchanged: to bring the industry together, to shape the conversation, and to define the future. Welcome to Digital Pay Expo 2026. Connect, create, collaborate, fostering Pan-African market expansion in the era of AI.
Thank you. I think that definitely deserves a round of applause. 26 years of shaping conversations that are directly impacting Africa's digital payment future. I think that's absolutely remarkable. Right, so our next speaker is a woman who has played a critical role in deepening financial inclusion and expanding access to financial services across Nigeria. She is a seasoned business executive and financial services leader with over 2 decades of professional experience in banking, digital payments, and financial services, including more than 15 years in senior leadership roles. She is the Managing Director and Chief Executive Officer of SANEF, which is the Shared Agent Network Expansion Facilities Limited, Nigeria's National Shared Infrastructure Initiative for accelerating financial inclusion through agent banking. She is a proven change agent. She brings deep expertise across digital payments, financial inclusion, agency banking, product and business development, merchant acquiring, and corporate, commercial, and retail banking. Her leadership has been instrumental in advancing secure and inclusive digital financial services, strengthening payment systems, and expanding last-mile access to financial services across underserved communities in Nigeria. She works closely with regulators, financial institutions, fintechs, development partners, NGOs, private sector actors through SANEF and other initiatives to drive ecosystem-wide collaboration. She is passionate about gender inclusion and women's economic empowerment as a gender specialist and advocate, with a strong focus on supporting women entrepreneurs and breaking structural economic barriers. As a certified trainer, she also designs and delivers high-impact capacity-building programs for individuals, youth, women, and organizations to enable sustainable growth and performance. Her professional credentials include being a fellow of the Institute of the Chartered Accountants, a certified product manager, licensed national business development service provider, and she has certifications in artificial intelligence, amongst many more. She has been recognized as a Women in FinTech Powerlist honoree and named amongst the leading Ladies Africa 100 most inspiring women in finance. With her extensive cross-functional experience and strategic leadership, she continues to be a driving force in advancing inclusive, resilient, and trusted financial systems in Nigeria and beyond. Ladies and gentlemen, distinguished guests, I would invite you to please give a round of applause for our next speaker, Mrs. Uche Uzebo. Thank you, Mrs. Uche. Please do continue to celebrate her as she joins us on the stage.
Assessed over $2 trillion globally in 2025, with Africa remaining the center of gravity of mobile money innovation. But the future we must build is not simply about more accounts, more wallets, or faster transfers. The future of Africa digital finance is about seamlessness, intelligence, financial resilience, and financial health for people and MSMEs, as well as trust and an economic that includes all. Nigeria gives us a powerful example of both progress and unfinished work. EFINA's Access to Financial Services in Nigeria 2023 survey shows that formal financial inclusion rose from 56% in 2020 to 64% in 2023, while financial exclusion dropped from 32% to 26%. That was meaningful progress, and we look forward to every great progress. Yet, it also means that millions of Nigerians are still outside the formal financial system, and many who are formally included still do not have access to the full value of finance, savings, affordable credit, insurance, pension, consumer protection, and financial resilience. That is why the role of institutions such as SANEF remains central. SANEF was created to expand agent network, deepen financial inclusion, and bring access points closer to the underserved and financially excluded communities. Through agent banking, millions of Nigerians have found a human bridge into the digital economy as agents constantly provide a place to open accounts, deposit, withdraw, transfer, pay bills, and build trust in formal finance. However, the next phase must go beyond access points. The agent must become more than a cash-in, cash-out location. They must become a trusted inclusion node. The merchant must grow more than just a payment acceptance point to becoming a data-rich enterprise with better records, better credit options, better inventory insight, better compliance support, and better pathways to growth. This is where agents and merchant payments become strategic. Nigerians' payment data already tells us that the shift is happening. The Central Bank of Nigeria's data shows that in 2024, NIB's instant payments reached 1.07 quadrillion, crossing over 1.2 quadrillion in value in 2025. Just take a look at the value of POS transactions in Q1 2026. 6.08 trillion in January, 6.58 trillion in February, and 6.12 trillion in March. This is a 79.03% growth compared to Q1 2025, and evidence that payments are happening in seconds. And to say this is just one channel just expands the scope of the conversation. You can also tell what agents and merchants are doing by just looking at the numbers. These numbers tell a story. Nigerians are transacting digitally at scale. But we must ask a deeper question. What do these transactions make possible? Every digital merchant payment is not just a payment. It is a record. It is a signal. It is a basis for credit scoring. It is a consumer protection rail. It is a tax and compliance insight. It is a building block for AI-enabled financial services. Africa is not short of transactions. Africa is short of trusted, usable, interpretable records that can convert economic activities into economic opportunities. So the future of Africa's digital financial services must be built on 4 non-negotiables. First, interoperability. A customer should not need to understand the difference between a bank, fintech, wallet, agent, card, QR code, mobile app, or USSD channels before making or receiving value. Seamless must mean usable across platforms, providers, borders, and income levels. The second non-negotiable is trust. Failed transactions, fraud, weak redress, and poor service recovery are not small issues. They are adoption killers. Trust is the real currency of digital finance. The third one is merchant-centered innovation. Africa's informal and micro-enterprise economy is vast. If we digitize only consumers and ignore merchants, we will create shallow inclusion. But if we digitize merchant payment, records, working capitals, inventory flows, and cross-border trade, we will unlock productivity. The fourth is Pan-African integration. The African continental free trade cannot achieve its promise if money cannot move efficiently across borders. PAPS and other cross-border payment innovations point us in the right direction, enabling African businesses to trade and settle in low currencies, reduce friction, and deepen regional commerce. Ladies and gentlemen, Africa's digital financial future will not be won by technology alone. It will be won by coordination, regulators enabling innovation while protecting consumers, banks operating infrastructures while deepening trust, fintech solving real problems sustainably, telcos strengthening connectivity, development partners supporting inclusion, and governments digitizing payments responsibly. The future we seek is one where a woman trader in Aba can receive digital payment, build a transaction history, access working capital, buy from a supplier in Accra, insure her goods, and pay taxes transparently and grow beyond her local market, all without being excluded by cost, literacy, gender, geography, or platform barriers. That is the promise of seamless digital finance. As we gather at Digital Expo 2026 today and tomorrow, Let us be clear, the future will belong to markets where banks, fintechs, telcos, regulators, and development partners collaborate on shared data, interoperable systems, and intelligence sharing rails, while competing responsibly on innovation, service quality, and consumer value. Africa's next frontier is not payment acceptance alone. It is payment intelligence. It is not digital access alone. It is digital value. It is not innovation from the top of the market alone. It is inclusive growth for the African market. If we get this right, digital financial services will not only move money across Africa, they will move opportunity, dignity, trust, prosperity, and resilience for individuals, households, communities, MSMEs, and markets. Thank you very much and enjoy the two-day event.
Thank you very much. Thank you very much, distinguished guests. Ladies and gentlemen, please let's put our hands together for Uche Oziobo, the Managing Director, Shared Agent Network Expansion Facility of Nigeria. I mean, she's one voice that is highly recognizable when it comes to digital payment ecosystem in Nigeria. Swiftly moving on to our next speaker. The keynote will be addressing, it's an opening remark. We just have to skip a few things because our distinguished speaker has to move on to other matters swiftly. So, as Africa's payments landscape evolves, strategic partnership between public and private sector players will become increasingly important. And our next speaker represents an organization that continues to drive digital payment innovation across the continent. She is the country manager, West Africa at MasterCard, based in Nigeria. She is responsible for advancing the MasterCard brand presence in West Africa, overseeing performance and strategic direction, deploying innovative payment solutions and partnerships with local governments and market regulators to build a world beyond cash. Before joining MasterCard, she held multiple roles in finance and banking industry. Her career began in 1995 as a senior associate audit and business advisory services in PricewaterhouseCoopers before she transitioned into finance and banking industry. She holds a BSc in accounting from Obafemi Awolowo University and an MBA in Information Management System from Texila American University in Guyana. She has also received an honorary degree from Veridian Christian University, awarded in recognition of her impact in business and Christian leadership. In addition, she received professional and executive education from Pan-African University, Harvard Business School, London Business School, and Gresham Leeham Consulting in the United States of America. She's a fellow of the Institute of Chartered Accountants of Nigeria, ICANN, the Chartered Institute of Taxation, and the Association of Enterprise Risk Managers. She's also a member of the Forbes Business Development Council and the Committee for Open Banking API Standard. Distinguished guests, ladies and gentlemen, please put your hands together as we welcome the country manager, area business head, West Africa, MasterCard Nigeria, Dr. Folashade Femi Lawal. Please keep the applause until she makes her way to the podium. Thank you.
Thank you so much, esteemed audience. It's such a joy to be here. An absolute privilege to welcome you all to the Digital Pay Expo 2026. As the saying goes by Winston Churchill, I'll make my contribution brief like a woman's skirt. Incidentally, I'm wearing skirt, so it's fine. I'll keep it long enough to cover the subject matter and then keep it brief to still generate additional interest. Because in the hall, we have captains of industry. And today is not about speeches, it's about unlocking that opportunity. I want to commend the organizers for bringing together the brightest minds across our financial and technology ecosystem. This year's theme, Seamless Digital, Fostering Pan-African Market Expansion in the AI Era, is both timely and, I dare say, urgent. A seamless digital Africa does not happen by accident. It requires deliberate orchestration. It requires us to translate the incredible ingenuity happening across the continent into this scalable and secure infrastructure. And we believe at Mastercard that to truly expand our markets in this AI era, we must focus on three critical priorities. Interoperability, the engine of Pan-African trade. Let me start by asking the audience, how many of us has had a peep into PSV 2028? To thyself be true. Please raise your hand, just indicate. If you've heard about PSV 2028, okay. By show of hands, please. I see. Digital Expo. We would like to create a segment for that in the next 2 days because there's a lot happening in that area. And we have to continue to be relevant. So, our first priority will be to break down the borders within our digital economy. Innovation is thriving across Africa, but then we create Chinese walls and fragmented systems which severely limit our scale. If a market woman in Lagos cannot pay a supplier in Ethiopia easily, cheaply, and transparently, we are artificially capping our economic potential. And in order to fulfill the promise of African Continental Free Trade Area a reality, money must move as seamlessly as information. Information in the world today, including Africa, travels with the speed of light. So should transactions, our economic visibility as well. So, this is the power of true interoperability. Through our MasterCard Move network, we are actively breaking down those Chinese walls. We enable value to move seamlessly across 17 billion endpoints worldwide. The demand for this connectivity, we found out, is massive. Last year alone, our cross-border volume grew by 15% year on year. By connecting local markets to global rails, we ensure African businesses are not just participating locally, but they are competing globally. And what we say to ourselves at MasterCard is, we empower people, we power economies, and we build sustainable business where every participant in the ecosystem, where they thrive. That's our mantra. The second point is embedding tech into everyday life. That will be our second priority in ensuring that seamless works for everyone, everywhere, always on. A digital economy is not truly seamless if it only works for online shoppers, but remain chaotic at the bus stop or the local markets. We must digitize the sectors where citizens experience the most friction daily. That means implementing open-loop transit systems in our mega cities, such as Lagos, to modernize urban mobility. It means digitizing government disbursements so social interventions can reach the right people transparently. We talk about government to people. We've got the platform to make that happen seamlessly. Most importantly, it means deliberately lowering the barrier to entry for the informal sector. Bypassing costly traditional hardware, more than 1.8 million SMEs have embedded technology into everyday commerce. They are turning smartphones into payment terminals, fueling a 10.45 trillion POS surge, and lifting Nigeria's economic backbone. So we are building an ecosystem that meets the everyday merchants exactly where they are. As you're all aware, post-COVID, the average Nigerian has become a business person, either operating from your car trunk on your living room or on your phones. Third priority addresses the reality of scale. In a digital-first world, trust is the most valuable currency. Every transaction depends on it. As millions step into the former digital economy, the primary concern is the safety of their money and the assurance that their data is protected. At MasterCard, this is where we have made deep long-term investments. We've invested approximately $12.6 billion in cybersecurity innovation since 2019. Wouldn't you rather do business with someone that's got you covered with such investment? For 2 decades, we have applied artificial intelligence to protect the ecosystem. We detect fraud in milliseconds and prevent threats before they happen. Our strategy is working. And a recent report shows that 83% of financial leaders rely on AI to flag fraud, saving millions in potential losses. Solutions like cyber secure and risk recon help businesses understand and strengthen their security posture, while our MasterCard Trust Center provide accessible tools designed specifically for small businesses navigating digital risk. You cannot be an enabler of data if you are not first a protector of it. Trust remains the absolute foundation for a seamless economy. In closing, ladies and gentlemen, as we spend the next 2 days exploring the future of payments, let us remember the ultimate goal. Technology is merely the tool. Meaningful human impact is the objective. Access alone is also not enough. At MasterCard, we've achieved a decade-long goal of connecting 1 billion people and 65 million small businesses to the digital economy. And we must ensure active participation and long-term financial health for all. That is why our new commitment is to connect and protect 500 million more people and small businesses by 2030. And guess what? It is achievable because we have the technology, the brilliant minds in this room, and the trusted infrastructure to achieve this. Together, we can build a seamless Pan-African digital economy. Thank you, and I wish you a highly productive conference.
These guys are a bit tricky, so
Thank you very much.
Thank you so much.
okay. Thank you very much, Dr. Folashade, and also for MasterCard's continued commitment to the advancement of the digital financial future in Africa. Okay, so our next keynote session examines a question that sits at the heart of this conference. What will Africa's digital financial services landscape look like over the next decade? And to help us answer that question, we have the honor of having with us today the Chief Operations Officer of Kenwich, Kenya, where she oversees operational strategy, service delivery across the company's payment and digital financial services portfolio. Washera Maina has extensive experience in fintech operations, payments innovation, and customer-focused service delivery. She continues to contribute to the growth of East Africa's digital payments ecosystem through operational excellence and technology adoption. I would invite you to please give a round of applause and a very warm welcome to Washera Maina. Thank you. Thank you. So I can give you this mic.
My first objective was not to fall down the stairs as I walked up. I'm one of those very clumsy people. I'm supposed to talk about collaboration, but my technology is not collaborating today, so don't mind the laptop up here. Good morning. I think it's afternoon, is it? Yes, it's afternoon. Good afternoon. Distinguished guests, partners, regulators, industry leaders, and the fellow builders of Africa's future. It's an absolute privilege to be in Lagos. It's my first time. And I think this city represents the energy, ambition, and presence that we are, as Africans, are moving at today. Thank you so much, Dr. Adeyinka, for the invitation. I met him in Kenya after I made a small speech somewhere, and I think it really focused on collaboration, and it was part of the theme of this year. Thank you to everyone at Intermark for this invitation. Now, let's go. I'm one of those people, when we speak, I like to relate to day-to-day stuff that's happening around us. So I have a bit of examples on what is working when we come to collaboration and what much else needs to be done. So as she said, my name is Miss Wachera Maina. I'm the Chief Finance and Operations Officer at Ken Switch. That's the switch in Kenya. We connect over 70% of the market, basically just driving interoperability between MFIs, SACCOs, banks, and mobile money operators. Collaboration is a very, how do I put this, personal to me. I've spent the last 19 years working in banking, fintech, and I've been in the intersection of institutions that need to work together to create value for customers. I have seen payments from the side of banks. I have seen them from the side of fintechs. I have seen them from the side of operations. And one thing has always been very clear. The greatest breakthroughs always happen when institutions come together and find a common reason to build. I'm sure a lot of you have heard about Cellulant. I spent almost a decade at Cellulant. We built the connections that you see now. Every market had its own regulation, its own banking practices, its own telco dynamics, its own consumer behavior. One thing that works in Kenya may not work in Malawi, Mozambique. And every market had its own operational realities. And that's exactly why I get immense pleasure when I know I was part of that small or big thing that we did there. Currently, Cellulant has a presence in 16 markets, operates in 8. So it means they have collaborated with other partners within the markets that they are not physically present at. I'm also a mother of 2 boys. They teach me collaboration every day. What? Times I want to give them away. At times I'm like, just come, mommy's here. But how I connect that to collaboration is you have to have a tribe with a common purpose of ensuring that they are good. I'm also, I love sports, team sports, Arsenal, Gunners. I also played basketball professionally, and I love watching that. Anyway, the point is there are always star players in a team, right? There's always that person who's always a starting 5 in the first 11. And there are also certain players who have different roles on the field, on the court. But what makes them, they may win again because of your best player, but what makes them continuously have sustained success is that every individual player understands their role, trusts each other, communicates, and executes towards that common objective. Now, let me bring it home. Oh, before I forget, I'm in Rotary as well. One of the things that is very dear to me, I'm the president of my club in Lavington. We have to collaborate across Rotary clubs across the world. Rotary was a dream built by one guy in 1905. He just came and said, I need to find a community that has impact across the world. Now we are 1.4 million Rotarians across the world. with projects that have used billions of dollars only because of coming together and working properly. So what is collaboration in this space that we are in? It is the intentional alignment of regulation, infrastructure, technology, commercial models, and I love that the speakers who came before mentioned trust. It just has to work so that Africa's payments systems stop operating as separate islands but begin functioning as connected rails for trade, inclusion, and economic growth. At KenSwitch, of course I have to talk about KenSwitch. We are not a bank, we are not a wallet, we are not even a telco. Yet every day we connect all of them. We facilitate transactions across ATMs, POS devices, agents, payment gateways, and increasingly in the new way of processing payments, like virtual assets. But because of what we do and where we sit, we have a unique advantage. We see where the money starts, how it moves, why it slows down, and quite often when it breaks. I'll use M-Pesa as an example. I'm sure we all know about M-Pesa. I'm almost done. It was a simple mobile transfer that evolved into something much bigger. It brings so much financial access to millions of people, to businesses, has tens of millions of customers across the world. But I have a question. If M-Pesa was launched today, will it succeed on technology alone? No. It requires everyone to come together to support innovation, agents willing to be the physical face of a digital service, merchants who will accept digital money, banks who will integrate. Innovation created M-Pesa, but collaboration scaled it. We have NIBs. I think this is a story we talk about in the office because we are looking to create a payment switch in Kenya. This, I believe, is one of Africa's greatest collaboration stories. Nigeria has built one of the largest real-time payment systems in the world. Think about what that means. Every day, millions of money and businesses, millions of people and money, and businesses move money across institutions that were otherwise competitors. It doesn't matter what bank you're in. We don't want the customer to think about what channel has been used, what infrastructure has been used to move my money. All they want is, when I need to get a service, I get it, and the merchant wants that when they fulfill a service, they are not struggling with settlement. Let's go to Ghana. I always try to pronounce this, but it just goes haywire. GHIPS has made important progress in building interoperable payment structure in Ghana. It also allows real-time interbank payments, and interoperability has become particularly significant there. Tanzania, do you know Tanzania started interoperability between mobile wallets before anyone thought about it? You know, the different MNO operators who were there, they were among the first pioneers with the interoperability between MNOs. We had Tigo, Airtel, and Zantel, later Vodacom, just send an important message to the rest of the continent. How do we keep, there's a difference between asking, how do I keep customers inside my system, or how do we make digital payments more useful for everyone? Of course, we can talk about the Rwanda e-switch. We can go north and talk about MISA. We can go to Morocco and talk about CMI, HPS in Morocco, Algeria and Tunisia as well. Those are practical examples about how collaboration works. So I have a few questions to everyone in the room. Final one, don't worry. I think I said final before, right? I promise this is the last one. I have a few questions for each of us. To the regulators in the room, are the policies, frameworks, and supervisory approaches we are putting in place enabling collaboration, or are they unintentionally reinforcing fragmentation? Are we creating enough room for innovation while still protecting stability, trust, and customers? As a regulator, hello, Deputy Director? To the banks, are we willing to collaborate on infrastructure, even as we compete for customers? Are we willing to open shared rails, shared standards, and shared platforms where we create market-wide value? And to the fintechs, are we building products that solve scale, or products that only work within our own closed environments? Are we designing for interoperability from the beginning? Are we thinking beyond user acquisition, or is it towards ecosystem contribution? To the switches and payment infrastructure, to us as CanSwitch, are we doing enough to make connections easier, faster, safer, and more affordable? Or are we simply processing transactions? Or are we actively enabling trust? To mobile money operators, are the networks we are building bridges? Or are you an island? Card schemes. I love, oh, she's gone. We are doing something in MasterCard in Kenya. So when I saw her, I got pretty excited. I'll find her. To card schemes, are we using our global experience to support local and regional ambition? Can global rails complement African infrastructure rather than replace it? Can we support innovation that strengthens domestic payment systems while still connecting Africa to the world? To investors, are we funding isolated products, or are we enabling ecosystems? And to all of us, are we ready to move from conversations about collaboration to actually building collaboratively? Are we ready to make it a part of how we design, regulate, fund, and connect scale payments across Africa? We create, we connect, then we collaborate. Thank you.
Asante Wasera. Ladies and gentlemen, please let's put our hands together for Wasera Maina, the Chief Operations Officer at CanSwitch Kenya, for that forward-looking speech on collaboration and the future of digital payments. And talking about collaboration, here in Nigeria, we often think the Ghanaians are brothers, but we have a lot in common with Kenya that people might not know. They have the famous matatus, and we have the danfos here. They also have ugali, and we have semo. What else do they have? They have the notorious borders, and we also have our own Okada. So welcome to Lagos, Karibu. We're happy to give you that Nigerian hospitality. Please let's appreciate her one more time. The next keynote topic will be on financial service regulation in the era of AI. This is a very serious and important topic. My regular day job is, I'm a broadcaster. I work for News Central Television. But a rival station decided to unveil AI news anchors. And I looked at my son and daughter and said, look, Daddy is going to need to step up his hustle, or this AI things will take my job. And I have to be thankful to the Intermac team for giving me this opportunity to showcase my other talents and keeping my pockets full. So please, let's appreciate the organizers, Intermac, for taking a chance with me. So artificial intelligence is transforming how institutions assess risk, detect fraud, engage customers, and make decisions. But with innovations come responsibility And to share regulatory perspectives on this topic, we will be having the representative of Musa Jimo, who is the Director of Payment System Policy at the Central Bank of Nigeria, where he leads policy development initiatives aimed at strengthening Nigeria's digital payment ecosystem and promoting financial inclusion. Widely respected within the banking and fintech industry, Musa has contributed to several transformative payment initiatives and regulatory frameworks that have enhanced electronic transactions, interoperability, and innovation within Nigeria's financial sector. Please welcome the representative of Mr. Musa Jimo, the Deputy Director of Payment System Policy at the Central Bank of Nigeria. Please, let's put our hands together for Chai Gang. Please keep the applause until he makes his way to the podium. They are regulators. Just remember that. Thank you.
Good morning, everyone. I'm excited to be here. I remember before my early years when I joined CBN, I believe Intermac then, a similar event, or this event was called Card Expo at the time. So as a young man working in CBN, I've attended these events for several years, and I'd like to give Intermac good work for keeping this up and sustaining it for so many years. As was said, I'm representing the Director, Payment System Policy Department. He's unavoidably absent. He sends his regards and wishes everyone a fruitful deliberation. It is a privilege to join you at the Digital Pay Expo 2026. I commend the organizers for sustaining a platform that continues to shape dialogue, collaboration, and progress. This year's theme speaks directly to a transition that is no longer ahead of us, but unfolding around us. For decades, through films, books, and popular imagination, we have been told that the future was something distant, something approaching on the horizon, defined by automation and intelligent systems. But the reality before us today is both simpler and more immediate. The future has not just arrived, it has settled in. It did not come with any formal announcements, and it did not wait for us to finalize policies and complete our preparations. Instead, it is quietly integrating itself into the fabric of how financial services operate, how decisions are made, risks managed, and value is exchanged. Artificial intelligence is no longer a concept reserved for strategic plans or long-term projections. It is already sitting in our offices, on our devices, shaping how we detect fraud, access credit, design products, engage customers, market operations, and also regulator activities. Across Africa and Nigeria, the payment landscape is undergoing a profound structural transformation, one that is redefining how value moves across economies. Transactions are no longer just faster, they are becoming deeply integrated, seamless, and increasingly invisible to the end user. At the same time, decision-making within financial services is shifting decisively towards data-driven and automated models, enabling institutions to operate with great precision, speed, and scale. Yet, to truly appreciate the transformative potential of AI in this environment, it is essential to step back and examine the deeper evolution of the financial system itself. This broader perspective reveals that AI is not emerging in isolation. It can and is amplifying changes that are reshaping the industry. What we are witnessing is a convergence of structural shifts, a stronger integration between banks, fintechs, payment service providers, and third-party service providers, continued expansion of instant payment infrastructure and digital delivery channels, increasing connectivity across borders, enabling more seamless movement of value, growing adoption of digital identity to enhance trust, onboarding, fraud detection, and financial inclusion expansion, and a growing reliance on data as a core input into financial service delivery and decision-making. Together, these forces are laying the foundation of a more connected, responsive, and intelligent financial ecosystem, one in which AI is posed to play a defining role. In Nigeria, several system-wide initiatives are shaping direction. Key initiatives are being implemented, and a number of them to note that the CBN in Nigeria is implementing. The first is the Payment System Vision 2028, which a number of speakers have spoken about, which provides a shared strategic payment roadmap for the financial industry. It prioritizes infrastructure, interconnectivity and interoperability, inclusion, innovation, cross-border payments, regional and global integrations, and system integrity into a coordinated path forward. Also, progress towards open banking is posed to establish the foundations for secure data sharing, enabling greater collaboration across institutions, and supporting the development of new products and services. Structured stakeholder engagements through platforms like the Bankers Committee and the recently inaugurated Payment Service Provider Committee, and other platforms such as the Nigerian Electronic Fraud Forum. And also through regulatory sandboxes, which provide a safe place to test and refine emerging solutions in a controlled way. Taken together, these developments signal a clear shift that the financial system is evolving in a connected platform where infrastructure, data, identity, and stakeholders operate seamlessly across institutional boundaries. Within this emerging landscape, AI will serve as both an enabler and a catalyst, unlocking new value, transforming service delivery, and expanding opportunities for innovation and employment across the financial service sector. Within this evolving system, AI is emerging as a central enabler across multiple areas, improving process capabilities, real-time fraud monitoring, automated transaction screening, and reconciliation processes. It is enhancing customer experiences and expectations and changing business models, embedding finance and support services, and also improving risk management and system resilience. Now, what are some of the regulatory and industry considerations? While these developments create significant opportunities, they also introduce challenges that require deliberate and coordinated attention. As AI becomes more deeply embedded in financial decision-making, the need for transparency and explainability will become more critical. This requires that outcomes are understandable, trustworthy, and can be effectively governed by both institutions and their regulators. While these developments present important opportunity, they also raise issues that require coordinated attention. As AI becomes more embedded in decision-making, the ability to understand and explain outcomes will become more increasingly important. AI systems are by their nature also dependent on underlying data. Where data is incomplete or unevenly distributed, there is a risk that outcomes may unintentionally exclude certain segments of the population. I guess a lot of us that have used AI, you will also see that depending on the information you feed it, sometimes it doesn't give you fully accurate data. In markets with significant informal activity like Nigeria and Africa, this should remain a constant consideration. AI systems also operate at scale and in real time. This means that both positive outcomes and potential weaknesses can propagate quickly, requiring robust oversight and monitoring frameworks. The growing reliance on data brings with it important questions around how information is also collected, consented to, protected and secured, and used in ways that are appropriate, transparent, and aligned with customer expectations. Confidence in the financial system will depend not just on how data is utilized, but on how effectively these considerations are governed in practice. AI-driven services often involve multiple layers of participation, ranging from those who develop the models to those who deploy them, and those who provide the underlying infrastructure. This distribution of roles requires clear accountability within frameworks and regulations and policies to ensure that responsibility and liability for decisions, outcomes, and associated risks are properly defined, allocated, and traceable across the value chain. What is the next phase for this development? I open the conversation by saying that the future is already here, and if we accept that to be a fact, then it should compel us to shape a financial system where transactions are authenticated seamlessly in real time by intelligence systems operating with speed, precision, and scale. That fraud is not only detected, but it is anticipated and prevented before it disrupts trust in the system. That credit flows more efficiently to individuals and businesses, informed not just by collateral, but by real patterns of economic activity. That financial services are personalized, adapting to customer behavior, needs, and preferences also in real time. That compliance and regulatory processes become more automated and responsive to emerging risks, strengthening oversight while reducing operational complexity. And that liquidity and risks are managed dynamically with institutions able to anticipate and respond to emerging pressures. And customers' interactions become simpler, more intuitive, and widely accessible. And lastly, that cross-border payments move across Africa with minimal friction, supporting trade, integration, and shared economic growth. What this represents is not just a more advanced financial system, but a more responsive and inclusive one, where intelligence drives the system, where intelligence drives how the system thinks, responds, and adapts. As we explore these issues over the course of this event, let us be mindful that the integration of AI into financial services represents both an opportunity and a responsibility. I wish you a very engaging and productive deliberation. Thank you.
Distinguished ladies and gentlemen, please let's put our hands together for Mr. Chai Gang for his very insightful message. Thank you so much. Ladies and gentlemen, at a time when Africa's digital future is being written in real time, digitalism arrives as both a challenge and a roadmap. In this groundbreaking work, Dr. Adeyinka Adeyemi argues that technology alone cannot transform societies. Digital culture must lead the way. It is therefore fitting that we unveil this important contribution here at the 2026 Digital Pay Expo, where innovation, inclusion, and the future of Africa's digital economy converge. Please join me in celebrating digitalism, building digital culture in the emerging digital economies of Africa, and welcoming the distinguished author, who is also the MD of Intermac Consulting, Dr. Adeyinka Alfred Adeyemi. Please, let's put our hands together for him. Thank you.
All right, good morning or good afternoon again. You must pardon me because this is an afterthought. It really wasn't meant to, happen. But I thought, Akim, what are you doing there? Please come and sit in front here. All right, thank you very much. Thanks for coming. Ushers, can I get one usher? Please, can you usher Akim to the front row? That's the CEO of InterSwitch. We can't allow him to sit on any other row, but can you give him a round of applause, please? Right, so I've been doing some work with respect to how we need to do a bit more than technology if we're to achieve some of the benefits that technology brings to us as a people of Africa. And this work was done mostly from the Intermark perspective in the digital finance space over 30 years. And the initiative called the Africa e-Governance Initiative in collaboration with the Africa Union and the Africa Peer Review Mechanism, which is an arm of Africa Union, as well as other agencies like the Good Governance Africa and so on across the continent. So this morning I thought I should just introduce the book, as many of you that would like to have a copy can have a copy. And the whole idea is to say that, well, the title of the book is Digitalism, Building Digital Culture in the Emerging Digital Economies of Africa. We need a cultural shift if we must achieve the full potential of a digital economy. A lot of African countries today will say they are transforming into digital economies to the extent that a lot of us now have ministries of digital economy. But the culture of our people need to shift for us to be able to gain the full potential. So this morning, I just wanted to introduce this book. It's not a launch, just to introduce it to our audience here at this event. And anybody that wants a copy will be able to pick up a copy. Thank you very much. We would like to then, let me hand over back to the compares, and then we'll take it from there. Thank you very much.
Thank you. Can we get a round of applause, please, one more time for this phenomenal contribution? Thank you. So we would like to invite some certain distinguished guests onto the stage for a group photograph at this point. So from Intermark Consulting.
Yeah, I think Dr. Adeyinka Adeyemi would have to come back on stage for group
for the group photography.
Yes. I would also like to invite directors from Intermark, Mr. Toba Otusonya. You're welcome. And Mr. Okpe Adesonya. If your name has Sonya in it, you're likely to be a director at Intermark.
Yes. And then Mr.
Dr. Okpe.
Dr. Okpe Adesonya. Thank you very much, Doctor. Mr. Chika Ugweze. Mrs. Uche Uzebo. Miss Washera Maina. Please do join us on the stage for the group photographs. You can come to the left-hand side of the stage. Thank you. Mr. Chai Gang.
Mr. Emmanuel Ojo from Red Tech. Mr. Akim Lawal, CEO InterSwitch, please join us on the stage. Miss Ngova Iyembe Nwankwo, Executive Director at NIPS. Please kindly join us on stage, ma'am. Sita Lango, Head Eastern West Africa, Swift Kenya. Please join us on the stage.
Thank you very much. Can we call all photographers to the front, please? Get prepped and ready for the group photograph. And if we ask if you have all of the books facing forward, thank you very much.
We would also like to invite Wiza Jalahazi and Maram to join us on stage. Please, let's put our hands together for them. Thank you.
Okay. Photographers, please do hold until we have everybody on the stage, until we've arranged. Okay, please do go ahead. Are you getting everybody in the picture? Okay, please do go ahead. Thank you. What a fantastic moment. Monumental.
Indeed. Very monumental.
Thank you. Of course, please.
Yes, and please, would like to have Mrs. Adeyinka Adeyemi join us on stage, please. Thank you.
And a round of applause,
she
please,
deserves
as she
a round of
joins the
applause.
stage.
Because behind every great man is a greater woman. Yes.
Absolutely. Thank you for joining us, ma'am. Please do join us in the middle.
Please stay beside your dear husband. Thank you. We would also like to invite Professor Keith to join us on stage. Please, let's give him a round of applause. You're welcome, Prof.
Thank you. Please do.
You know, it's looking more like a United Nations General Assembly.
It is such a diverse picture. And Dr.
And Dotun Kope. Mr. Dotun from OPE.
Please do
can you
join us on the stage. And a round of applause, please, as he joins us on the stage. Photographers, can we double check that you are getting everybody in the picture? Because we have
if you need to arrange them.
So can we have an usher or a couple of ushers? Let's move the podium so we make sure that everybody is in the picture.
Or do we have a photographer that would like to direct them on the order of photography? You might. Would you like to? Yes. You are honored to use this microphone just like the MC.
Are we good? So if we move this.
Yes, we need a big smile, please. Thank you very much.
Thank you very much. And can we have a round of applause, please, as they depart from the stage? Thank you very much.
Can we please have our lectern back on stage, please? Thank you. Sorry. Man. To the next. Where's your, okay.
I think you can add the wall.
I think open
this. Okay, thank you very much for your patience as we concluded that section of the...
Datari, you know, we weren't invited to the photography session, but it's fine. MC's lives also matter.
I know.
Next time in future, I'm sure they'll ask us to join.
Or someone is taking one. I think you should turn and have a look at that one. Well, we do have one more keynote before we move to the next portion of the session. And this keynote is focused on the African fintech frontier and the hot topic at the moment, leveraging AI to unlock a unified digital economy. Across Africa, AI is rapidly moving from buzzword to business reality. It is helping financial institutions detect fraud faster, serve customers better, extend credit more intelligently, and create entirely new business models. But the question remains, how can AI help accelerate the vision of a truly unified African digital economy? To answer this question, it is our honor to invite a distinguished technology leader to the stage.
Yes, and would like to welcome the Chief Operating Officer and Chief Technology Officer of OPay Nigeria, Mr. Dotun Adekunle. Please put your hands together for him as he makes his way to the stage. Do you have slides?
Yes, I do. The clicker. All right, thank you. Good afternoon, everyone. To Dr. Adeyemi, congratulations on the organization of another Digital Pay Expo. It's not easy to keep running an event for 26 years. For a lot of our Gen Zs, they were not born when you started. That's just shooting my shot at them. All right, I work with, working in the technology field means that I work with lots of people who are Gen Zs on a daily basis. But good afternoon, everyone. What a moment, an extraordinary moment to be gathered here together. It's a pleasure, always a pleasure to be here. Africa does not need permission to lead in financial services. The permission was never asked to ask for. The continent is already building. The continent is already leading. Today, I want to talk to you about three powerful forces that are converging on this continent simultaneously. And what happens when we harness all those three forces together. As has been said, my name is Dotun Adekunle. I lead operations and technology for OPay in Nigeria. And this is the African fintech frontier. We want to leverage AI to unlock a unified digital economy. Africa stands at the intersection of these three powerful forces. Let's see where that go. Where should I point to? All right, I'm just going to read, right? Okay, it's working now. All right, Africa stands at the intersection of the forces, unlike anything in financial history. Three forces are converging right now, all at the same time on the same continent. What is the first force? The first force is a young and ambitious population. The median age in Africa is 19. That's not just a demographic statistic. It's a declaration of intent. It's a significant opportunity. It means that the most digitally native generation in the whole of human history is coming of age on this continent and right now in front of our very eyes. That means that we have a great opportunity because that generation will not adapt to our financial systems. Our financial systems will adapt to that generation. The second force is a rapidly expanding digital economy, mobile penetration, internet access, digital commerce. All these things are expanding at unprecedented rates, and they dwarf what you even have when you look at other regions on the earth. Africa's digital economy is not emerging, it has arrived. The third force that we need to look at is the transformative power of artificial intelligence. AI is not a future technology to Africa. AI is the present. It is a present solution to present problems. It is available today. It is scalable today. It is deployable today. So when we walk the streets of Nigeria today or the streets of Lagos, we see a generation that has never known a world without smartphones. That's the generation that we have to build for. They don't understand what a diskette is. You know, I was looking at my Microsoft Office suite, and I saw that the save icon is still a diskette. And I was asking my son, why do you think this thing is called save? He said he doesn't even know what it is. He has no idea what it looks like. And I said, this is a diskette. This was where we used to save information in those days. So we have a digital native generation that we have to build for. It's a new day, and we have to build for that new day. But we cannot talk about the opportunities alone. We also have to talk about the obstacles that stand in front of us. Africa's biggest problem is not poverty. That's what we always think. When you think of Africa, you think of poverty. But the greatest challenge in Africa is not poverty. The greatest challenge in Africa is fragmentation. Fragmentation across multiple sectors, across multiple environments. That's what we need to solve for. And truly, if poverty is difficult to solve, I can tell you that fragmentation is solvable. We can correct that narrative if we take on the collaborative efforts that has been engendered by everyone that has spoken before now. What are the 4 areas of fragmentation I would like to discuss? The first one is that we have fragmented payment systems all across Africa. 54 countries, 42 currencies, dozens of incompatible payment networks. Cross-border value transfer in Africa costs more than anywhere else on earth. More expensive to transfer money from Nigeria to Kenya than it is to transfer money from Nigeria to Europe. I'm happy that you are here. So we need to make collaboration and make things happen. So fragmentation is a problem. Secondly, we have fragmented regulation. I'm happy that my guys, I can see many of them, they are here. But we also have fragmented regulation. Each market operates under a different regulatory jurisdiction and different regulatory regimes. A fintech that works in Nigeria cannot easily just pack his bags and go to Kenya and start to operate, or pack his bags and go to Ghana and begin to operate. Whereas you have built the infrastructure already, you have built the payment system already, it should be easy to replicate as you move across the borders. But that is not the case today. So there is a lot of fragmentation there. We also have fragmented data. Without shared data infrastructure, AI cannot learn at continental scale. What you have today is siloed systems. AI learning on my own system, even within our own country, Nigeria. The AI models that we have are learning on OPay data. And then the AI that InterSwitch has is learning on InterSwitch data. And the AI that NIBS has is learning on NIBS data. Nothing is learning across the system. And so we are in a fragmented environment with fragmented data. And finally, we also have fragmented markets. Trade between African nations is constrained by payment friction, foreign exchange volatility, and compliance complexity, making intra-African commerce more expensive than trade with Europe. We recently were launching a payment service on a pilot basis. It was a payment service of a transfer of remittance between Nigeria and Ghana. And when we were trying to challenge the providers that, look, this has to happen very fast. And we're used to transactions happening in seconds, in less than a second. They were telling me, no, this is an African transfer. This is not Nigeria, where you expect everything to happen in less than a second. You have to accept it. And we're saying, no, we are not accepting it. Our customers are used to a standard. If this is what works today in Nigeria, that should work across all of Africa. That's the way we have to go. We are still fragmented, even in our expectations today, and there needs to be a change. AI is the opportunity that can bring about that change, so that when a trader in Kano wants to pay a supplier in Accra, the system should not tell her or him today that you have to lose almost 8% in terms of your cost, in terms of remittance cost. And then you have to take 2 or 3 days before you have a guarantee that the payment has arrived. So AI presents a historic opportunity to change this narrative. I want to be precise about something. AI is not a product announcement for African fintech. AI is the engine that powers a unified African digital economy. For 500 million unbanked Africans, AI is the branch, AI is the teller, AI is the loan officer, AI is the fraud analyst, and the compliance engine all at the same time. We are not adding AI to banking. We are using AI to build banking for the first time for the people that the old system never reached. That's what we have to do. That's where the battle lines are drawn. AI enables intelligent payment routing. That's one of the first things that we put down there. Making every transaction smarter, making them faster, making them cheaper. Real-time fraud detection that protects without creating friction. Automated compliance that adapts to 42 currencies simultaneously. And alternative credit assessment that makes the 100 million credit invisible adults visible. Personalized financial services tailored to local languages and behaviors, and embedded finance woven invisibly into agriculture, into trade, and into healthcare. We are not catching up when we do this as Africans. We are leapfrogging because we don't have the burden of having a legacy financial infrastructure. We can build for the very first time and build something new by the way that we are. Africa is a wallet continent. The MasterCard people have left, so I'm safe. Africa is a wallet continent. And so we can, with the ability of our wallets and our bank account, build something really remarkable, leveraging the power of AI. The future is now. The future is here. And we have to work together to make it happen. Let me give you 5 concepts or 5 concrete pillars where AI changes everything. Pillar 1 is intelligent identity. Intelligent identity. AI constructs verifiable digital identity from behavioral, transactional, and biometric data, enabling access for the undocumented and the unbanked. At OPay, our verification systems onboards over, I don't want to mention the figure, thousands of customers daily. Many are opening their first ever financial account. AI gives them a financial identity in under 3 minutes. They have financial access and they are financially included. Pillar 2 is frictionless payments. Real-time cross-border rails powered by AI routing and intelligent FX optimization, reducing remittance costs from 8% toward the 1%. That will not be incremental improvement. That will be transformational access if we make it happen. Pillar 3 is alternative credit. Machine learning models built on mobile money transactions, on airtime patterns, on merchant data will unlock credit for 500 million people invisible to traditional credit bureaus. The day we can predict a market trader's credit worthiness from our airtime purchasing behavior, and more accurately than a traditional bank, that is the day Africa will leapfrog the West in financial inclusion. Pillar 4 is unified regulatory AI. That's very important. Compliance tools that adapt in real time to multi-jurisdictional regulation. That will be massive. Enabling fintechs to scale safely across all 54 markets. Because I know that when I'm making this transfer from Nigeria to Kenya or to M-Pesa, I'll be able to adapt based on AI to the rules and regulations in that jurisdiction and make a difference. That's where we have to go. And pillar 5 is embedded finance mesh. AI-powered interfaces that weave financial services into agriculture, into healthcare, and to commerce, making finance invisible and indispensable. Everything that I have described, I live every day at OPay. So let me take you inside the engine room. OPay serves over 40 million customers in Nigeria. Many of them had never walked into a bank before. They walked into the OPay app. And here is what AI makes possible at scale. AI-driven onboarding, national identity verification combined with selfie biometrics and machine learning liveness detection onboards thousands of customers daily. The rejection rate is under 1%, the time is under 3 minutes, and that's a revolution as far as access is concerned. Thank you. Intelligent point of sale routing. When the Central Bank of Nigeria introduced the geo-fencing, the way they are looking at me, let me turn this way. Okay, but I'm looking at news. I'm fine to look this way. Well, when the central bank introduced the geofencing policy, it became very important for us to re-architect our old routing architecture. Everything had to be built again from ground up because we were trying to just make sure that we maintain uptime no matter what, so that each time you take a card on the point of sale terminal, no matter what is happening, that transaction is going to succeed. That's the promise that we have to give to our customers, and that's what we have to do every day. But it was AI that powered how that happens. Remittance intelligence. We have a product today called OPay Remit that uses predictive algorithms to choose the best FX models that we can use as we move into this direction on the Nigeria-Ghana rail. Alternative credit. Like I said before, OPay has 40 million customers. Every transaction they make with OPay is a data point that tells us who they are, how they manage money, and how much credit they deserve. That is a revolution in credit assessment, and AI, again, makes that possible. Let me now show you the most important data point in this entire presentation. Yes. Sub-Saharan Africa receives over $90 billion in remittance every year, sent home by the African diaspora, by mothers and fathers working far from home. And what does the system charge them for that act of love? 8.46%. Because they want to share love with their loved ones. Because they want to send some concern home. Sub-Saharan Africa is the most expensive remittance destination of any region on earth. The Middle East and North Africa, 5%. South Asia, 5.3%. East Asia and the Pacific, 5.6%. Latin America, 6.2%. Even Europe pays less than Africa. And they are the richest, right? And they pay less than Africa. Why? The United Nations has set a target that 3% or less by the year 2030. Yet Sub-Saharan Africa is not on that path yet. At 8.46%, Africa is nearly 3 times the target. When a mother in Lagos pays 8 cents out of every dollar, he sends her son from the US just to access that money. That is not a fee. That is a tax on the diaspora. It is a tax on love. AI is the most powerful tool that we have to end that tax, and we have to work together collaboratively to make the difference. I want to be honest with you about something. The technology is the easy part. AI, we can build the AI. We can build the rails. What is harder, what requires something more than engineering, is the will to collaborate. Like my sister from Kenya said, achieving a unified African digital economy will require unprecedented collaboration among regulators, among banks, fintechs, payment networks, and governments. Not incremental cooperation, but unprecedented collaboration. Interoperable, we must build 4 things together. Number 1, interoperable systems. I like the fact that many other people have mentioned this before. They must build the payment rails. We must build the identity networks. That's actually a big problem as we go across Africa. Nigeria is lucky with what has happened with NIMSI and the BVN database that was developed by NIBS. So we have some form of national identity, and that became a bedrock upon which our payment systems evolved. Across the continent, we do not have similar stories occurring in different nations. And until we begin to do that, not just in Nigeria, but across the continent, that is when things will begin to go in the direction that we want it to evolve. Next is that we must have trusted data governance. So data identity infrastructure, which is like continent-wide digital identity, is a prerequisite. Then next is that we must have trusted data governance. Africa's data must be governed by African institutions for African citizens. I'm pausing for effect. If we allow the data of 1.4 billion Africans to be extracted and monetized only by foreign platforms which have no data centers or data sovereignty in Nigeria, then it's not just we don't miss a compliance check, but we have missed a strategic imperative. So CBN, some of the things that you sent to us of late. We are in agreement. We are in agreement. Thank you. Next slide. I want to say something that might surprise you. Now I'm coming to the regulators. Regulators are not the enemy of innovation. In many cases across Africa, they are the architects of it. The most sophisticated AI deployment. Some people are laughing. That laugh is suspect. I did not laugh. Oh, there's some people that are laughing. The most sophisticated AI payments deployments in African fintech are compliance first, not compliance last. I had the privilege of speaking at the Central Bank of Nigeria's Payment System Vision 2028 launch some weeks ago. The energy in that room was extraordinary. There is genuine regulatory will in Nigeria to enable AI-powered payments infrastructure, and that is a signal that the whole continent should take very seriously. One of the things I took from that meeting was what the governor of the central bank said, that he wants payments to happen in Nigeria at the blink of an eye. That before he blinks his eyes, payments should have happened. And that is the vision that we are all carrying as an ecosystem. The CBN payment system vision, therefore, is not just a compliance mandate, it is an invitation to build. The NIBS integration creates the foundation of AI-powered transaction monitoring across Nigeria's entire payment system, and the Pan-African payments settlement system and AFC-FCTA payment protocols creates regulatory momentum that we all require. As I draw to a close, let me give you the frame I want to carry out from this room. African fintech has written a heroic first chapter. We brought banking to people who had never had it. We built mobile money networks that reach millions who had been invisible to the formal financial system. That chapter was extraordinary. But a chapter is not the whole story. Chapter 1 was about financial inclusion, and we should be proud of what chapter 1 has achieved. Chapter 2 is about integration. It's about knitting 54 fragmented markets into a single intelligent economy. It is about making the movement of money as frictionless as the movement of information. A trader in Nairobi competing in Lagos, a farmer in Dakar selling into Cairo. African commerce finally matching African ambition. Chapter 2 means 54 markets connected by intelligent payment rails, AI native credit for 500 million credits invisible adults, real-time cross-border commerce at near zero friction, unified data and identity across every African market, and AI is the pen that writes that chapter. So what does this require from us, from the people in this room, to the industry? Build AI with African data for African realities. Stop importing Western credit models and training them on our data. Rather, let's train on local transaction patterns, on local languages, on local behaviors. The model that works in Silicon Valley was not designed for Sokoto. We need to build something much better. To the regulators, we need to create frameworks that are wide enough to experiment and fast enough to scale. The sandbox must let us fail safely and move to market quickly when we do succeed. We need to continue to collaborate as the payment systems department has been doing, so that providers are not left behind when they see new policies. To investors, I say to us, we need to fund the infrastructure layer, not just the apps, but the identity rails, the data networks, and the AI training infrastructure as they evolve. They may be unsexy investments, but they make everything else very, very possible. And to all of us, we need to collaborate. Collaborate on infrastructure, and then we can compete on the products. I know what it feels like to want to protect your competitive edge. I live it at OPay every day. But the market opportunity in Africa is so vast that cooperation on infrastructure does not diminish competition. It expands the entire game. We are not fighting over a pie. We are baking a new one. The opportunity before us is absolutely clear. To leverage AI, not merely to build better financial products, but to build a truly connected Africa, where commerce flows freely, where inclusion is universal, and where economic opportunity knows no borders. Let me leave you with this. The first chapter of African fintech was about inclusion. The next chapter is about integration. AI is the bridge that can connect 1.4 billion people into a single digital economy. And the decisions that we make today, the conversations that we have today, the connections that we make today will determine whether Africa consumes that future or whether we create it. Africa's 1.4 billion people will not wait for the world's financial system to arrive. They are building their own with AI, with mobile, with data, with a resolve. Our responsibility is to ensure that that system is open, that that system is inclusive, and that system is worthy of that emerging generation. The African fintech frontier is not a horizon that we are chasing. It is a ground that we are standing on. So I say to every one of you, let us build. Let us build together, and let us build now. Thank you.
Thank you so much, Dr. Dotun Adekunle, for those great insights on AI and how it is impacting the African market. Thank you very much. Now, ladies and gentlemen, we move on to one of the most anticipated sessions of day one. Africa has over 1 billion people, dozens of currencies, multiple regulatory frameworks, and hundreds of financial institutions, thousands of fintech innovators, yet the goal remains the same: to create a payments ecosystem that is both seamless, interoperable, and inclusive. And this next session, which is our power panel, brings together some of the leaders who are actively shaping that future. Moderating this important conversation is a very well-respected technology transformation leader. He is a partner at Deloitte who has served as an engineer and an engineering, AI, and data leader for technology and transformation in West Africa. He leads strategic initiatives focused on artificial intelligence, data transformation, and enterprise technology solutions across industries. With significant experience in digital transformation, advanced analytics, and business innovation, he advises organizations on leveraging emerging technologies to improve efficiency, competitiveness, and long-term growth. He is widely recognized for his expertise in technology-driven business transformation across Africa. So, ladies and gentlemen, please do welcome to the stage Mr. Wole Oyeniran from Deloitte, who will be moderating the next panel. Please, I think we can do a louder round of applause. I know it's been a bit of a while. Okay, thank you.
I have no idea who she's talking about, so if he shows up, please let me know. Good afternoon, everyone. It's a pleasure to have you here today at Digital Pay Expo. A great day so far, and we look forward to making it even great. Free trade area. There's a critical question that we need to ask ourselves. Can Africa truly become a connected economic marketplace if moving money across borders remains difficult, fragmented, and expensive? The challenge before us is no longer about digitizing payments. We've been there, we've done that. The challenge is building payment ecosystems that are interoperable, scalable, intelligent, trusted, and inclusive. That is the conversation we'll be having now. So to introduce the panel that will be deliberating on this, I will start with the first panelist, Ngove Iyembe Nwako. Please join us. She's an Executive Director of Business Development at NIBS, where she helps shape Nigeria's payment systems. There. Thank you very much. So as you come on board, please come this way. Thank you very much. Akeem Lawal, please join us. He is the Managing Director of InterSwitch Pure Pay, and he brings deep, practical experience in switching, transaction processing, and payment ecosystem growth. And finally, Mayokun Owolabi. She is Vice President, Global Expansion and Payment Partnerships at Flutterwave, where she leads strategic initiatives focused on market expansion, payment channel enablement, and ecosystem partnerships across multiple African markets. A round of applause for my highly distinguished panel. A round of applause for my highly distinguished, thank you. Thank you very much. Thank you. So now we start our conversation. Permit me to go to my seat. Thank you. Hello, everyone. So I want us to warm up this conversation with a question, and you all take 1 minute, please, to respond. What do you believe is the single biggest factor that will determine whether Africa succeeds in scaling interoperable payment ecosystems over the next decade? If you have one word for it, that would be nice. So please, you can go down this way, starting with you. Yes. Mr. Mike. Okay. What do you believe is the single biggest factor that will determine whether Africa succeeds in scaling interoperable payment ecosystems over the next decade? Single biggest factor from your view. If you have a one-word answer, that would be lovely. Go ahead.
Okay, good afternoon, everyone. And
Hi,
thank you
Maiwa.
very much. I'm happy to be here to speak to everyone. I wanted to say a single word, actually. But what I would just say is collaboration and less fragmented markets. Once we are able to connect everyone and every partner.
Ability solved, and many other things solved.
Thank you so much. Sita?
Well, I would go with trust. And the reason for this is because just quoting the speaker who just spoke up in the previous session, he was very clear about the impact of fragmentation in the continent. And this is a huge factor when it comes to achieving collaboration. And without trust, when it comes to data, exchange of data, when it comes to systems interoperability, I think that's the main factor. Trust will help us achieve this.
Thank you, Sita. And Tolokwe, please.
Well, I'd say cross-border interoperability.
What are the biggest barriers preventing true interoperability across African payment ecosystems today?
So I think the first thing is really even understanding the concept of interoperability, because sometimes we think about it as sort of connecting computers or systems together. And I think when you think about it that way, then it's abstract and you don't quite recognize its role in everyday life. And that's why I said it's about connecting economies. And one thing that I've seen certainly is that within the domestic markets, we now have, and I think Dotun was sharing the statistics, we've done a great job building domestic rails. You've got instant payments, you've got mobile wallets, we're limiting economic development, limiting growth. And I think the barriers, to my mind, obviously there are the regulatory barriers. So, you know, different countries have different standards, as Akim was speaking to, which impact the way you're able to trade. The other barrier that I see is related again to his comment around standards. So what may work in one country or what is incentivized in one country is not necessarily what is incentivized in the other. And so the reality of it is that we've really optimized for national efficiency, but we haven't optimized for a connected Africa. And I think that is where the challenge lies.
Thanks, Ngove. Sita, how much more urgent does AFTA make this interoperability conversation to us?
Good question. So when you look at what AFTA have done in terms of optimizing trade, especially in the Africas and the fragmentation and the low inter-Africa trade, once these numbers are improved and increased and AFTA is doing its bit on that, then we should have payment, especially payment efficiency, not just in terms of interoperability, but also in terms of cost. Because you don't want to achieve efficiency in terms of payment, but then someone has to go dig deep into their pockets just to be able to facilitate trade, then at the end of the day, a lot of the gains that has been achieved will not meet the expectations that we wanted to achieve. So the urgency is there, just to answer your question, that payment interoperability and to accompany the cost efficiency has to go hand in hand, just to support the efforts that are being done, are being made by us.
Yeah, thanks, Sita. Just a follow-up question.
Yeah.
Now,
5% of payments leave the originating bank and gets to the beneficiary bank within 10 minutes, less than 10 minutes, 75% of the payment. But there's a lot of friction between the beneficiary bank and crediting the beneficiary. So you can see 75% less than 10 minutes, but then it takes a day or more just to credit the beneficiary. So what are the factors that contribute to this? Regulatory is one. The previous key speaker say that regulation is our friend and not the enemy. I agree with them, just to appease the regulators around and not to, they cheaper, should I need to go with this solution? So when it comes to cost, when it comes to regulation, when it comes to interoperability, the processes, we have financial institutions here when they receive payments, even if it's as low as $50, it has to be manually reviewed before it's credited. So those are frictions within operations. And that's why I started by saying you have basically listed almost all of them in terms of improving efficiency within the cross-border to domestic crediting.
thanks, Sita. It sounds like we have a bit to overcome to make this happen. Now, coming to you, Mayokun. Flutterwave operates across multiple African markets. So what are the biggest payments ecosystem challenges that emerge when scaling across borders from Flutterwave's experience?
Okay, thank you. For us at Flutterwave, has also been a challenge as well. I know that a couple of people have also mentioned trust, and we have to make sure that we're able to build that trust over time. It's not an overnight thing in terms of our branding, our positioning, and ensuring that when you make a payment, you are going to get your funds, because people are not comfortable if they don't know you. They want to know where their fund is going, A to Z. How efficient is your payment? What is your infrastructure? And that is why we've also tried to get as many licenses as possible. Right now, we're the most licensed fintech in Africa, because we want to ensure that we have the compliant rails, the regulatory framework in place to ensure that we can scale and launch appropriately.
So, just a good interoperability conversation. But now, let's look at infrastructure. Now, building infrastructure is one challenge. Scaling it reliably under high transaction volumes is another challenge. Now, consumers expect payments to be instant. I was said just by the previous speaker from OP. It's an expectation now. They expect them to be invisible and dependable. They shouldn't have to be asking, where's my money?
We as InterSwitch, we've been building a Pan-African business for years, right? We've faced the challenges of regulation, we've changed the challenges of market access, we've faced all of those challenges. And the more we see it, the more we realize that probably the one single most important thing to do is standards, right? If we can get AFCFTA, PAPs, and the central banks to agree on a common set of standards on identity verification, on anything in that line breaks for 1 second, 30,000 customers will not be able to get value, right? One of the biggest examples I can share was a few years ago, we had the cashless situation in Nigeria, and a lot of infrastructure broke. And most of why it broke was that people are sized for 30,000 transactions per second, but they were seeing transactions of 60,000 transactions per second, and things fell through the crack, either in the front office or in the back office. So the ability to plan for capacity is really the most important thing. And once you do that, you're planning for capacity on your hardware, your software, your infrastructure, and your interconnectivity, and your partners. And that's the first thing that breaks.
Thank you for that comprehensive response. Now, I'll come back to you, but first, Emmanuel, what infrastructure gaps continue to limit payment scalability across African markets?
All right. It's quite similar to what you asked, Akim. So I'll divide mine between urban and rural. Now, within the urban space, where we already have a lot of connectivity achieved. The issues we're having now is inconsistency. You know, I use the word consistency in operations. We have inconsistency in API model. And based on those inconsistencies, things tend to break. You know, we're talking about things breaking. You know, and also we have, generally speaking about Africa, which is the most popular word, interoperability issues. You know, whereby you have to rely on a particular scheme. We need a situation whereby, regardless of which payment scheme you are using on any acceptance solution, it can go through. Those are some of the challenges. Coupled with network connectivity, internet latency, and all of that, that is urban. In the rural area, while we mostly, in most fintech forums, we say we are still scratching the surface in terms of fintech penetration in the continent. Two major infrastructural needs has to do with telecommunications and power. Without this, it will be very difficult for financial inclusion to get to the desired state. That's a great limitation. So I dare say that my response to that question will be that, particularly in the rural area where we have a significant
and visible. What realities make that difficult at scale?
I think the biggest challenge, and I think to explain it, you kind of need to understand what happens when I open my app and I try to do a transfer, or when I take my card to an agent and I try to do a cash out. It will probably surprise many people to know that those transactions may touch up to 8 different institutions. Right? Let me say it again, 8 different institutions. And in each institution, you're passing networks, you're passing hardware, you're passing software, right? And every one of those must work seamlessly for the customer to get that seamless experience that they have, right? So the answer is really making sure that all those 8 connections work and work at the same standard. Now, usually that's not possible. Usually that's not possible. So the way Nigeria has evolved, and it's the way Africa must evolve as well, is that you must create alternative routes, and it has an additional benefit. And that benefit is that you can then optimize for cost, optimize for experience, and optimize for reliability. The experience that Dotun said, where it's taking, I don't know, 2 minutes, 1 minute, by the time you build multiple redundant infrastructures, you will be able to deliver that much faster and build the competition necessary to deliver that as well.
Thank you so much. That transparency is very important. I mean, up until fairly recently, I didn't know what a session ID was. But, oh yeah, smiling. So, but anytime a transaction disappears, that's what you have to start chasing around. And customers should not even have to know what that is. But here we are. Multiple parts, redundancies, perfect. Now, Emmanuel, you have built platforms that process high transaction volumes. What operational lessons have you learned in doing such?
Good question. I will take it from a customer service perspective. You need to build a system with multiple redundancy operations behind it. Because, like you said, customer does not need to know about session ID, which is a 30-character thing. When you mentioned session ID, I went back to where we started instant payments. So you need to have, in this modern day, you need to have a very robust infrastructure. And when I talk about infrastructure, you have multiple redundancy systems working in parallel, whereby you can have smart routing feature. In a situation whereby if a system is down, without the customer knowing, your system can automatically route to the next system. If you depend on a single system because you had a successful vulnerability penetration test, then you are an amateur in this current age. because if you rely on a single system, you'll be disappointed. Other issues revolves around security. You also have to protect the customer's credentials as much as possible, even though we know that customers may tend to compromise their credentials at times. So that is where financial literacy also comes in. You know, we play down on financial literacy, but it's very essential. You'll be amazed at the number of people that still have trust issues, you know, in terms of adopting digital payments. We need to let people know that, you know, encourage them to adopt financial solutions, and then also educate them on how to keep their credentials safe, you know, so that the required level of confidence needed by the ecosystem can be maintained. Thank you.
Thank you so much, Emmanuel. So infrastructure only creates value, however, when businesses and consumers actually use it. So merchant adoption is where payment innovation creates economic impact. So Lokwe, hi. MasterCard work across banks, fintechs, and merchants. What do the strongest payment ecosystems have in common?
Okay. Going back to where we started from, right? They are interoperable and they are trustworthy, because without trust, really, you can't really achieve much, because trust builds adoption, right? If people don't trust a system, they cannot, adopt it, right? And interoperability also affects skill. It impacts skill, because when you don't have interoperability effective in an ecosystem, you realize that people are working in silos. So I have to log out of this app to go to this app. I have to log out of this one to go and do this. But what that does is, what we do in MasterCard, for instance, is, Akim spoke to it earlier, where he mentioned standards. When we create these standards from a scheme perspective, it helps us to work with different stakeholders within the ecosystem. And if we enforce the standards and work with regulators generally across multiple jurisdictions to ensure that these standards are adopted by all the operators within the ecosystem. And these standards help us to build the trust that consumers need to be able to operate within that ecosystem. I just want us to imagine a situation where I'm sending money and my money doesn't get to the beneficiary. And at the end of the day, I call my bank and the bank doesn't know where my money is because they don't know how they routed the money or something. And that happens in the case of stable coins, for instance, when you get an address and you are sending money, and if you miss one digit.
Mayoko, what partnership models have proven most effective in accelerating payment adoption and market expansion? And this is like a continental view we're having here now.
Okay, thank you. So it depends on the market. So it depends on what our go-to-market strategy is. So it's not a one-size-fits-all. We can't do exactly the same thing in every market. But typically our approach is to partner with local institutions, local financial institutions, so that they can provide that reach for us, because they have the existing reach, they have the trust, they have the rails, they have the connections that they've made locally already. While it might not always be the most efficient, but it's the faster approach for us to get to the market. And the reason why it might not be the most efficient is because of differing priorities, different infrastructure, middleman pricing, and the likes. And so in those instances, we also tend to connect directly to the source, whether it's to NIBS or whatever is the source in that particular country. And so with that, we make sure that we partner with as many institutions as possible, telcos, switches, card schemes, and all the different types of partners, even other fintechs as well.
Quick question, Emmanuel. What needs to happen for merchants to transact across African borders as easily as they transact domestically? As briefly as you can.
You're going to make us repeat this word
as many times as it's
1
necessary.
million times. Interoperability.
Okay. But what does that mean in that context of merchant transactions? Exactly.
All right. We have multiple acceptance solutions that cuts across the ecosystem. Same goes for the consumer aspects, which is payment schemes. We have multiple payment schemes. We need a situation whereby we have acceptance solutions that are empowered to receive any form of payment scheme on that terminal. That's really needed. We equally need trust. Something happened in Nigeria in particular about 2 years ago where we had a dirty December. And merchants did complain that based on their experience, when foreign cards were used on their terminals, the cardholders went back to their home country and applied for a chargeback. And this created a lot of deep, revenue loss, so to speak. And that now affected their confidence. So we need a situation whereby merchants can be protected. They can be protected. Regulatory frameworks, there's a lot of standardizations that cuts across that ensures that if a merchant has done the right thing, they shouldn't have to pay for doing the right thing. Also, onboarding process. We need onboarding process to be simplified. Sometimes a lot of complications could result to frustration.
It doesn't matter where they are in the world, right? It's because there's a scheme, right? I think Africa needs schemes. Schemes that create that trust across payment providers across the continent, saying that we have defined certain standards, we have defined certain rules, we have decided certain frameworks that if you do a transaction on this scheme, it doesn't matter where you are in the world or where you are on the continent, you will have this same experience. And if we cannot do schemes, we need ecosystems, right? Schemes might be difficult to build. InterSwitch is building one, Afrigo is building one, PAPS is building one. But maybe we need ecosystems, where ecosystems is like schemes, but it's really disparate players coming together to say we're willing to accept and adopt common standards for the way we want to do business across the continent. And I think this is an opportunity for African players, Pan-African players, to come together and say, we will create an ecosystem where within ourselves, we will adopt certain rules, certain standards to make cross-border payments across the continent happen. So we need schemes and we need ecosystems.
Thanks so much, Akeem. Let's now move to intelligence. Now, AI is rapidly changing how payment ecosystems operate, but it also creates new risks around fraud, cybersecurity, data, and trust. Ngove, hi. Where can AI create the greatest value within payment infrastructure?
I think if I could say it in one sentence, it would be helping us make better decisions. Okay. I think there's a lot of conversation around AI, and it seems to suggest it means that we hand over decision making to the AI tool. That's not the case. Within all the sort of everybody's business here, we're generating large amounts of data. It is impossible for the human mind and the human eye to review all that data and make decisions. And sometimes we're making decisions when we're blind, when the insight stays within that data. So I think for me, that way for us to leapfrog some of the challenges that already exist and allow us to make better informed decisions. And I think for me, the other thing that we haven't talked about enough is that I think in Africa, we have a unique position. We don't have enough jobs, right? And I don't think AI's role is to limit the number of jobs we have already. I think it's really about even creating bigger and better economic opportunities that allow us to create even more jobs. And that's where our mind has to be going.
Thanks, Ngove. Now let's wear the other cap. Sita, hello. Now, how should African institutions prepare for increasingly intelligent fraud and cyber threats?
As Gobi have rightfully said, when the role of AI and data when it comes to analyzing some of this information. Now, allow me to reference back to what SWIFT did since 2020 by introducing ISO 20022, which is the enriched data standards. Now, richer data means that more information can be introduced into the messages, into the financial data messaging, meaning that analysis of a specific pattern can conveniently be done, whether through technology and 100% through AI, because when you have to correlate all this data information to come to a conclusion that either there is risk or there is no risk, you really need deep dive analysis into this information. Now, when it comes to Africa, and this is not just limited to Africa, but from a global perspective, I think we need to normalize introduction of making use of this technology, especially such a technology as ISO 20022 that has been enriched, not just to send messaging data in ISO format, but to be ISO native. And what this does, it means that the fields, the messaging fields will be populated enough, rather than using translators. Because we find a lot of native, or not native, a lot of legacy systems within financial institutions. Legacy systems that have not adjusted to the technology that has been introduced in order to meet some of these expectations. Now, with legacy systems, what that means is that messages will still be generated in the old format that is limited. Now, with all limited formats, when the messages are translated into the enriched data, the data is limited, you know? So the translation does not meet the expectations of the introduction of the new standards. So we still end up with limited data in an enriched standard. Now, if you analyze this data to be able to eliminate fraud or to be able to understand patterns and make specific decisions, you're still working with very limited data, despite the fact that technology has advanced to facilitate the introduction of analysis, enriched data analysis, the introduction of enriched standards. So Africa needs to normalize advancing their systems, not just advancing the technology, in order to take full advantage of the benefits and the values that even AI is going to bring in terms of analyzing patterns and helping resolve issues that encounters with fraud, or of course fraud most importantly, but also in terms of AML and sanctions issues, which of course plague our continent when it comes to de-risking. Yeah.
Thank you so much, Sita. So standards are important, and making sure that there's compliance across board to reduce what my cyber people call maybe attack surfaces and other things like that, and to reduce vulnerabilities. Yes, thank you so much. Now, before we look into the future, which is the last part of our conversation, please, audience, can you prepare your questions? Because that's what will follow immediately after. Gather your thoughts, and let's talk. 1 minute or less each. And I'll go around the panel, starting from you, Mayokun. If we meet again in 2030, what will have changed most dramatically about payments in Africa? Let's dream here. We don't have to be holding on to constraints. Let's look ahead. What do you think would have changed the most? 1 minute or less, please. Go ahead, Mayoko.
I think there will be less friction in money movement. Right now, it's not easy to move funds across border, either due to exchange rates, liquidity, and all that. We have the likes of PAPs that are trying to do that as well today across Africa. So I think that's what will significantly change. The standards as well with the regulatory framework will most likely align, and that's what we're seeing today with Ghana, Rwanda, Kenya, and the passporting.
That transaction will be settled in local currency. We won't need any foreign currency. And if there is a dispute, it will be resolved quickly because I can open my phone and resolve it within 10 to 20 minutes, right? To do that, we must have multiple schemes on the continent, so I'm anticipating we'll have multiple schemes. And we must have multiple payment ecosystems that is made up of people who are today competitors, but tomorrow collaborators, working together to deliver that vision.
Like my Gen Alpha children will say, clock it, clock it. Exactly what he said. Emmanuel.
I believe improved interconnectivity. As RegTech, where we serve the fintech operations of United Bank of Africa in 20 countries in Africa. We have 54 countries in Africa. We will be working towards improving interconnectivity through a single API that can deliver transactions in 54 countries, multiple locations. Because when we look at some of the limitations in terms of infrastructure, lack of standards in APIs, we need to see how to improve on all of that, generally speaking. So improved interconnectivity is something I'm looking at.
Thanks, Emmanuel. Sita?
I'll have to say reduced fragmentation, and I'm looking at it from the perspective of, as he has rightfully said, we have 54 countries. I don't have enough trust to believe that these 54 countries are going to come together as one Africa. So what I'm going to go with is regional blocks integrating. So we have the Southern Africa block with their payment system, we have the Eastern
markets today might eventually lead to a situation where African countries are now adopting their own digital currencies. Like we have CNGN today, where even the IMF reports that was released was saying that African countries should be more careful with adopting digital currencies in other countries' currencies rather than their domestic currencies. So we will see that evolution over time, and the interoperability will extend to digital currencies. Thank you.
Thank you so much. We have now reached the audience Q&A part of our program. We have explored interoperability, infrastructure, merchant adoption, AI, and continental integration. Let us now hear from you in the audience. Now, please keep your questions concise. I will cut you off if they are not. Apologies in advance. I am a wicked person. And where it is possible, direct your questions to a specific panelist. Otherwise, I will take that responsibility. Please, your questions need to connect to payments, scale, interoperability, adoption, regulation, AI, and or after. So let's have questions from the audience. Please go ahead. Anybody? Any other hands? Wait, we'll come to you.
Graduate from product to utility, because free and fast transfers, I feel, is the right of the customer. And then other things like, other things like, trust, and we can't be marketing trust to the customer. Like, I feel it's their right. Like, we need to market other things instead of these things, because at one point we are making it feel like, okay, like it's a marketing strategy instead of something that is supposed to be. So at one point, does financial infrastructure graduate from being a product to utility?
Thank you very much. Akim?
Yeah, so the direct answer is when you don't know it's there. If we as infrastructure providers can get to the point where you don't even know we exist, right, then I think that's where we would have achieved that. And to get that, it means that our infrastructure uptime needs to have up to 6 or 7 nines of availability. Our connections to third parties have to be that same level of availability. And if something breaks, right, because it's technology, it will break, There are alternative routes to get value, but there are also faster ways to get redress. When we get to that point where a customer can do a transaction, local or cross-border, and they don't even know that there was technology involved, that's when we get to that point. And that's a challenge that I think she's throwing to all of us as providers.
Thank you very much.
I hope I answered your
Want
question.
to add something to that, Emmanuel? Oh, you're good. You're good. Top notch. Please, you raised your hand a moment ago. Raise your hand again. Microphone, where is the microphone? Okay, that's fine.
Thank you very much. Good afternoon, everyone. Thank you once again for the privilege to ask this question. My question goes to Mr. Hakim, and I'll be very brief. So I'm a freelancer, you know, and it still seems like trying to receive payment from US still very hard. So I want you to speak to what exactly, I mean, I know Nigeria is still greatly marginalized, and like we've spoken today about fragmentation and stuff like that. So I mean, from the technical side of things, what exactly is wrong? Why would it be difficult in 2026 that you can not just create an invoice from the comfort of your home and then you get paid from maybe someone in Texas or something, just, I mean, with this.
Today, right? And technology infrastructure is probably not one of them, right? There are other issues because the technology exists. We accept Visa here, we accept MasterCard here. We don't accept Zelle and the others, but those are more, should I say, compliance regulatory issues than anything else. The real issues come when you have to deal with FX, and when you have to deal with currency controls, and when you have to deal with some of the standards that we need to adopt as merchants to be able to support those kind of international payments, right? And there's a lot of work going into trying to solve that. Again, I'll refer you to PSV 2028. It's the vision that the central bank has crafted for us for the next 3 years. Those are specific items that as an industry we are trying to solve, right? How do we resolve the issue of FX? How do we resolve the issue of standards? How do we resolve the issue of interoperability between Nigeria and the rest of the world, whether it's global north or within Africa itself? Right? It is those issues that we have to solve.
Thanks, Hakim. Sita?
Yeah, please allow me just to add on that. And Hakim rightfully say when it comes to the payment within the cross-border and into the domestic market, you are right that there's a challenge. I just want, first of all, to cancel the notion that Nigeria is marginalized. Nigeria is one of the largest economies in the world, and you cannot talk about Africa without talking about Nigeria. So it's a very strategic and important market from a global landscape. Now, what SWIFT is doing right now to facilitate cross-border and domestic payments is what, right now we are building what is called SWIFT Scheme. So Scheme, basically what we are trying to do is to bridge payment initiation all the way to crediting either to wallet or to a bank and facilitate that interoperability. So we are working with banks right now, and we launched this last year at Cybos in Frankfurt. What we are doing right now is that we are encouraging banks to expose payment initiation on the front end, in the mobile interface and internet interface, so that at my comfort, I can be able to initiate payment 24/7. So we have a lot of global banks, and today morning I had a conversation with one of the local banks here in Nigeria. I've had a conversation with the central bank where we are trying to actualize this here in Nigeria. Now, once payment has been initiated, the other level is payment processing. Can payment be processed 24/7 so that you can facilitate that end-to-end to ensure instant payment from initiator all the way to the beneficiary? Now, on the receiving side, we have to work, of course, with the intermediaries. Those are the banks that are going to receive the payment, and their ability to pass those payments instantly into the customer's wallet. And that's where we have to collaborate with the instant payment service providers, the IPS. Like in Nigeria here, we have to work with NIBS, we have to work with InterSwitch, and we have to work with the instant payment providers so that payment can be passed from the bank instantly into instant payment provider, and they can credit it to the beneficiary bank or they can credit it to the wallet. So this is currently happening, and we hope that in the future, you'll not have to walk into a bank with a hard copy document, but you can easily upload it on your front end and allow that process to continue, and you'll not have to move payment from a bank into a PSP before you are able to send it, or payment has to hit a bank before you are able to receive it. So right now, actively SWIFT is working on that to facilitate that end-to-end. And again, collaboration is important here with the players, the banks, and also the instant payment service providers and the wallets.
Thank you so much, Sita. We have a question from here and a few online questions. So we'll take your question, sir. He's right. Okay, you have the microphone. Go ahead.
Yes. I'm Weezer from eBanks. My question is, I keep hearing about these challenges of interoperability and how it's the key to unlocking this regional integration, and I'm not really convinced, right? I feel like the technology exists there. To what extent is this a corresponding banking with Citibank? I said, how is Citibank getting involved? We're in Lilongwe. So is it really an issue of technology, or is it an issue of we Africans don't trust each other's currencies? And I would like Mayokun to start with that answer, please. Thank you.
I was going to start anyway. But thank you for that question. So yes, you have rightly said that is it an issue of us trusting each other's currencies? Because even the PAPS that has started now, it's being pegged against the dollar, right? And so the conversion from Naira to cedis is not direct. We still have to introduce the dollar component before we can now transfer it to cedis. So that's something that needs to be solved for. On the Flutterwave platform, however, we have the way you can convert as well. So you can decide to give us Malawi, Kwacha, and then we can give you Naira, or we can give you cedis. So it depends on which market. Not every market that we're licensed to do so, but in the markets that we're licensed to do so, we can do that. So it's all about what the exchange rate is, what we charge you on top of that as well before we can do that. There's no one system that can do that conversion across all markets today. And we're hoping that PAPS will be able to eventually do that for us.
Yeah, thank you very much. 30 seconds.
30 seconds. So, Mayo, the question is, why don't we have that system? Why don't we build it, right? Reality is that Europe went the way of a single currency. I don't believe that Africa will, right? I believe that we have the capabilities because of blockchain and stable coins and those things that we can build on the blockchain infrastructure to actually solve the currency problem on the continent by digitizing our local currencies and then using the blockchain infrastructure to make that interoperable, right? And we can do that today, right? And the banks, the Pan-African banks, have liquidity in multiple African currencies, and they can play the role of liquidity partners in addition to the IMTOs and in addition to all the cross-border payments partners here. I think we can.
Yeah, thank you very much.
Just to also add to that as well, stablecoins will solve that for us in the immediate. The Flutterwave platform we already have access to stablecoins. We can do that off-ramping, on-ramping on our platform today. So whether it's remittances or maybe you're collecting on behalf of, a merchant is collecting payment from a customer, you can also do that as well.
Go ahead. Yeah.
When I think of stablecoins and I think of the USD issue, I'm not sure we've solved the problem, and that's what I wanted to raise. And I think for us to really crack the nut, we have to start thinking really far and hard about how do we digitize our currencies using commodities. And I think until we get to that point, and I think there are already conversations around it, but if you move from a USD to a USDT conversation, I think you're only pushing you're kicking the can down the road. The real question, I don't think, is a trust issue. It's not necessarily a trust issue. Is do I have a use for that currency? But somebody else may have a use for that currency because they're doing something else.
Thank our highly distinguished panelists. It has been a rich and robust conversation. Please give a round of applause to our panelists. It's clear that technology is not the only pillar in this conversation. And if we are going to consider all the pillars, more robust conversations at the transnational level, central banks need to happen so there's agreement on what the way forward is. But the benefit is clear to everyone. We need to make this work to strengthen our overall economic stance as Africa. So thank you once again. Appreciate your time and have a lovely rest of the program.
Thank you very much. Please let's put our hands together for this fantastic panel session. I would like you to wait behind for a few seconds for group photographs before you leave the stage, please. Thank you very much. Let's put our hands together for the distinguished moderator and our panelists for that insightful discussion. The future of payments will depend not just on innovation, but on interoperability, trust, and shared standards. Thank you very much. So I announced earlier that we have gifts to give and also presents to be won. This exercise is not going to take more than 30 seconds. Please, can we have the QR code on the screen? So it's a two-part or three-part game. You have to complete all of that before you get your gifts. And let me just give you an idea of what the gift is. It's a specially curated box of gift items and souvenirs from all the sponsors that are here today. So just imagine the goodies you will be going on with if you're successful. So if you like goodies like me, I'd advise you to participate in this exercise. The instructions are on your screen. And if you're wondering what sort of gifts you will get, all you have to do is just look behind you or look for where we have our sponsors, and just imagine there's so many banks there too. I see Premium Trust Bank, and I think there's First Bank. So imagine what you will win from banks. What do banks do? They keep money, so you might just win money. But swiftly moving on to our next activity on the agenda. It's been quite an interesting and insightful day one. The next agenda on the conference is the DFS Lab and EFINA sessions. They will be handling all the activities will be happening here. And to give the opening remarks from EFINA is the COO, Financial Services, Omni Retail, Ms. Foyinsolami Akinjayeju. Please let's put our hands together for Ms. Foyinsolami Akinjayeju from EFINA. Thank you. Please, you can do better. Let's give her a resounding round of applause, please.
Okay, so I'm Foyinsolami Akinjayeju. However, I'm going to introduce Jake Kendall, who's going to take the opening remarks. Thank you so much. Jake.
Yes. Thanks. Thank you. So, I didn't realize we were already at my section of the program. So, very honored to be here. Always love coming to Lagos, and especially to talk about payments. It's such a rich ecosystem. Are we gonna? There we go. And do you have a clicker for me on the slides? Okay. Thank you. Oh yeah, that's a lot better. So we're going to get into the Merchant Payment Observatory here in 1 second, but I just wanted to reflect a little bit on what we've seen today and the story I think it tells. In particular, you look back at you know, the different presentations and the panels that we've had, and you see a very dynamic and incredible ecosystem, I think. You know, we've got money point, no pay, head-to-head competitors, world-class technology providers, world-class fintechs. You've got a very dynamic regulator, a dynamic set of infrastructure building out in terms of NIPS and NIBs and the identity system, NIN, and you know, so I think in particular, Nigeria is a very fascinating, exciting landscape. And right now, I think is when we're really starting to see momentum and real growth. And it's because of that, I think, that we have launched the Merchant Payment Observatory. So I'm going to explain to you what that is and show you some of the initial results out of it. And and I will introduce myself when I introduce the rest of the team as well. So what is the Merchant Payment Observatory? As I said, Nigeria is an incredibly fast-moving, dynamic market, and it's a market that needs data to understand what's happening, where it's going, and what the real ground truth is in the payment space, and in particular in the merchant space. So our Merchant Payment Observatory is a multi-country research initiative. We're conducting the data collection across Ethiopia, Nigeria, and Pakistan. And what it's creating is the first nationally representative survey of the merchant population across the country. That comes from a survey that we've done of 3,200 or 3,300 merchants. And I'll explain to you how we do it, but it's weighted so that it's representative of the entire merchant landscape. The north of the country, the south, the urban, the rural, large merchants, small ones, big cities, small cities, the entire country is included in the data that we're about to show you. It includes also cash merchants, so merchants who are not part of the digital payment system, as well as digital ones. And it covers adoption, barriers to access, the economics, credit readiness, so the entire picture that the merchants experience. What we're going to be showing you today is the baseline. So the first set of data that we've collected on the merchant payment ecosystem, and then we're going to be repeating it over time. So this is going to be not just data that you know, informs you as a one-off snapshot, but it's something we can all use as an ecosystem to track what's happening in the Nigerian merchant payment ecosystem. What the data is not, so it's important to recognize the limitations. It's not transaction data that doesn't come out of the banking system or the payment system. It's not an evaluation. It's just a market tracker. It's telling you what's happening. It's up to us as the ecosystem members to decide what that means and how to evaluate it. It's not a complete picture, right? It captures what the merchants experience, and we think that's very important. That type of data is actually very rare, and so we think it's, you know, very useful to have that perspective, but it's not the entire picture. And it's not final or prescriptive, right? These are findings for consideration, for debate. They don't imply a particular policy. Okay, so to pull off a data collection activity of this scale and size, we had to bring together the right team. And I first want to thank our partners at Afina. They have been wonderful in helping us pull this together. And in particular, they bring an incredible depth of local knowledge and insight and relationships. And so they've been instrumental in helping us build this. And most of you know them, but their commitment to the local ecosystem, the local financial sector, and to financial inclusion goes back decades. And they're an incredible pillar of the local context and great partner for us, as I said. My team is the DFS Lab, and my own background, I'm an economist. My name is Jake Kendall, and I'm the co-founder and general partner at DFS Lab. I've worked at the World Bank, I worked at the Gates Foundation. When I was at Gates, I launched the Global Findex, which some of you may have used that data, but that was a project I initiated when I was there. And so have done a bunch of similar large-scale data collection projects around the world, but in particular looking at finance and payments and things like that. And my team is an incredible team of researchers as well who've helped build and back this study. You may be saying, DFS Lab, we've actually heard of you guys, but not always in the research context. And so we are both a research firm, but I think actually more well known as investors. And we're a venture capital firm. We invest all across the continent, and we're investing right now in the intelligent digital infrastructure for the growth of the African economy. And we have about 40 to 50 companies that we've invested, many of them here in Nigeria. And so we think that that investment experience gives us a lot of insight into how to build a research study like this. We're not just ivory tower researchers, we're actually on the ground. And then we have incredible partners with us here as well in the in Brand Fusion Group, who have decades of experience doing on-the-ground merchant activation and data collection from merchants all across the continent, and they've been amazing partners in pulling this off. So we have I think, a really amazing team to create the kind of data that I'm going to show you today. Now, we don't want to just have data, of course. We've got to go from data to action. And so part of doing that is a number of different events and initiatives that we're taking on around this data. We have a couple of reports that we're launching today. We have the flagship report, and we're also we have a kind of a shorter note on the commercial opportunity and for the private sector. We have a few events. So we're doing this event, of course, that we're at today, but we're also doing a product boot camp for some of the market-leading fintech players and banks. Interswitch will be there, OPay, MoneyPoint, First Bank, I believe, a number of other players. And the idea there is to really take this data, identify what market opportunities it exposes, and then help them build products that they can launch in the near term to expand growth of the merchant ecosystem. And then we're also going to be showing you later, there's a dashboard for this data. So the interactive dashboard will allow you to go get the answers from the data that you want for your particular questions. So we've got a way that you can go in and kind of pull out particular pieces of data that fit your particular need. So very exciting. So I want to, before we get into what the data says, I want to kind of give you an understanding of what it took to collect this data and how do we know that it's rigorous and what the answers actually represent. Because I think it's important to understand that before you can trust the answers and the numbers that I'm going to show you. Thanks. So first, to start off, to do a survey of national scale is actually quite challenging, as you can imagine. And we've got to start with the underlying data that the government uses through the National Population Commission. We started with them. They gave us the same baseline population data that any national survey done by the government or done by the large-scale survey firms would use. And that starts off by dividing Nigeria into thousands of little plots where the National Population Commission can tell us who lives in each of those plots. And what they do is they divide them up and randomly give us a sample of them so that there's no bias in the data, right? The data is randomly selected from across the entire country. And what that forces us to do, if you look at the map here, that means that the data that we collect is going to come from all corners of the country, right? It's going to come from the north, the south, cities, rural areas, etc. And then what we do is we go in each of those population areas that they've given us, is we walk the streets and we tag every single street-facing merchant in those enumeration areas, so that we know every store, every place where a person can walk in and pay with cash or with digital or whatever it is, okay? Then from that population that we've tagged, we then draw another random sample and go survey them. So as you can see, it's a very rigorous and very structured process, so that we don't have the typical kind of biases that come in. The way a lot of companies would collect this data, they would walk around Lagos and around certain neighborhoods, and maybe they drive out to a rural area or something, but they wouldn't do the entire national coverage the way that we've done it, and they wouldn't do it in a random way. And what that implies for us is a lot of headache and a lot of costs, because to be able to move people across the entire country to collect data is a very challenging operational hurdle. So I just wanted to give you, maybe just because I like, I'd love to get a little bit of sympathy for how much time and effort that took. I wanted to give you a real sense of how much effort goes into this, this data. Also, just to be clear, we sample firms of any size, from medium-sized stores, small, we're rural, and 67% were urban. Now that may surprise you. You may say that seems really small. Maybe these guys didn't actually go into the rural areas. Well, the issue is that in rural areas, there's many, many fewer stores than there are in urban areas. So even though we did cover the rural areas very thoroughly, there's just a lot fewer stores in rural parts of the country for reasons you can probably understand. So, and then in terms of the types of businesses and the staffing profile, just to give you again kind of a sense of the broad population of Nigerian merchants, the majority have permanent structures. We also surveyed, maybe a third or more who are either street side sellers or temporary structures. So we, again, we're not just surveying large stores or bigger merchants. We're really getting the entire long tail of merchants. And then in terms of staffing, the vast majority, 62, 63%, are micro enterprises with 0 staff, which is, your classic mom and pop shop, right? It's mom, it's pop. They're the ones working the cash register. Maybe it's the kids, maybe it's a cousin, but they don't have permanent staff, right? Then for the ones that do have permanent staff, about a third, most of them hire a relatively small number, 2 to 3, somewhere in there. Some have a lot more, but most are just a few people. So, that's just the overall profile. Now, I'm going to give you the top 5 findings, and then we're going to dive deeper into each of these and try to understand what's behind it, okay? So, first, and maybe most important, 75%, so basically 3/4 of Nigerian merchants accepted digital payment, okay? Now, it's vastly dominated by OPay and MoneyPoint, which won't surprise you. One thing to maybe clarify when we say a merchant accepts a digital payment, we're not talking just POS terminals, right? We're talking people who accept bank transfer payments, which is pretty common, probably more common than POS, but also those who take money straight into a personal account, right? So they may have a personal OPay or MoneyPoint account or mobile banking account. They accept payments directly into those. So we ask them about any form of digital payment that they accept, and that's what goes into that number, okay? Now, beyond adoption, so adoption is broad, right? I think this is a very impressive number. It shows that the market has really started to mature in terms of broader adoption, but it's not translating into deeper business usage, and I think that's the main message of the data, right? Which is merchants are very happy with the payment that they have, the payment providers. They have a 98% or 98.5% satisfaction rating, but most of them still operate in personal accounts, something like 60%. And the credit aspect is, I think, in particular important. So about 64% of merchants tell us they want credit, or they need more, but only about 7.5% of them actually borrow. And so there's a huge gap in terms of who gets credit and who wants credit. And one kind of point of a bright spot in there, though, is that while not very many of them borrow, a large number of them do borrow through digital platforms, through primarily MoneyPoint and OPay. About 15% then borrow through banks, and only about 16 are relegated to borrowing through family and friends. So it's a market with a huge, sort of gap, but one where we are starting to see real advances in digital credit and things coming out of the digital platform players. When we ask merchants what are the barriers that keep them from using more digital payments and making that a bigger part of their business, the vast majority of them cite transaction fees and fees in general. And this is in contrast to what we see in other markets where infrastructure or identity barriers, lack of smartphone, lack of connectivity, those are not the main barriers here, right? So in Nigeria, the infrastructure is not the problem. It's really a market that's matured to the point where transaction pricing is really the problem. Another very interesting fact that we see is social commerce. So about 12% of the merchants we surveyed, and these are physical merchants, not digital merchants, because we're not able to survey the digital ones. About 12% of them are doing some form of social commerce. They're using WhatsApp, Instagram, Facebook, et cetera, to market themselves, to reach out to customers, and they're using those platforms to move their product and to complete sales, and a lot of those are resulting in digital payments. So I think that's an interesting potential opportunity within the market to start to leverage some of those transactions that are already happening in digital form. Okay, so we're going to dig in a little bit deeper now into payment adoption, right? So as I mentioned, about 2/3 of the merchants that we surveyed across the country three-quarters rather, accept digital payments. One of the things we found exciting and kind of surprising was a relatively low urban to rural gap, right? 65% of rural merchants that we surveyed are accepting digital payments in some form. Now, again, they may not be accepting most of their payments in digital form. They may do it relatively rarely even, but we think it's notable that so many of them are in some form able to accept the payment in a digital way, right? We then break down acceptance across kind of different demographics, and you can see that there's no gender gap at all, which I think is quite interesting, right? Male-owned merchants versus female-owned merchants almost accept digital in the exact same proportion. There's a very small gap, but not a very notable one, between younger and older merchants. The biggest, of course, is in the rural to urban area. So a lot of that is going to be based on factors like turnover and sort of the merchant categories that are prevalent in rural areas. And we'll get into that a little bit in a second. So if we look at, oh, whoops, sorry, went the wrong direction. So this is always an area that's exciting, right? So we can, based on the data, create kind of a leaderboard in terms of which companies, which banks, which providers are capturing the most merchants and facilitating their payments, right? As you can see, about 90%, 91% of the acceptance is being done by the digital players, by MoneyPoint and OPay, by the e-wallets, okay? Their growth, obviously most of you know, it's been quite impressive and incredible over the past couple of years. And I think if you're surprised by any of the numbers in this report, part of it will be just how fast things have been moving. So if your intuition is tuned, maybe the on-the-ground reality may be changing so fast that your intuition may be a little bit defeated. In terms of, for me, it was very surprising how many rural merchants are accepting, and a lot of them are accepting through MoneyPoint and OPay. So very much more recent, entrance into the digital universe. We then have the mobile banking applications, which are about 30%. Relatively strong diversity of competition across multiple different banks. In the POS terminals, you can see that the leaderboard switches, right? OPay was leading in terms of e-wallet. In terms of POS, MoneyPoint is leading by a fair margin. And then the mobile money applications are almost non-existent in the market, right? Very few merchants reported using them to accept payments. And then when you look at channel concentration, I think that's pretty interesting as well, which is you do see multi-homing, so merchants that accept payments via OPay and MoneyPoint and maybe a mobile bank or a banking application. But it's not very strong, right? We often have the image of the merchant with like 6 or 7 different POS terminals where they'll accept from lots of different ones because often they're trying to get more robust service. If one goes down, they can use another or what have you. There's no interoperability. That's not really the case here. The vast majority of them are accepting payments through one single channel. So, and again, a lot of that is the e-wallet applications. And then where's the money coming when they accept that payment, right? A lot of it is going into personal accounts. So again, this is a market where people pick up, they adopt a personal account. Maybe they only adopt one, like I said, a single channel. It's usually OPay or MoneyPoint, and they're accepting money straight into something that's their own personal account. And that there's a lot of factors that go into that. A lot of it is just simplicity, right? It's relatively simple to open a personal account using your BVN number or other ID, and you can do that online in a very simple way. So that's driven a lot of growth. And then I think where the market needs to go next is to start to deepen the usage, formalize those into more formal business banking accounts, and which will then facilitate things like credit and sort of expanded depth of value creation for those merchants. So personal accounts dominate on both channels. Both mobile banking over here and e-wallets are dominated by personal accounts. The e-wallet players seem to have facilitated a little bit more in terms of business registration. So more of the merchants on those platforms are registered and using a business account. But in general, it's relatively dominated by personal accounts. I think one of the, so the other thing that we looked into was just like, what does it look like for the ones who are adopting e-wallets versus mobile banks? And you can see that the e-wallets tend to be much more recent adopters. So ones that have become businesses more recently, and they end up adopting the sort of e-wallet, as opposed to the ones that have been around longer, probably had those relationships from before with the banking apps, were the banks, and they're receiving payments through a banking relationship. So not surprising, and again, points to how fast the e-wallets have been growing. The other thing, if you want to start to target, which are the stores most likely to adopt merchant payments and digital payments, we look at turnover and footfall. Now, one of the things we see is that turnover tends to be a much stronger predictor of adoption than footfall. So if you look at footfall above a threshold kind of around 25,000 naira or 50,000 naira in that band, almost everyone above that level is using digital payments as a merchant, even the ones that have relatively few customers, right? So if you just look within that band, there's not very much variation in terms of customer footfall. It all tends to be, or most of it tends to be determined by turnover. Now, footfall, you can see here in this bottom graph, footfall does correlate with the digital adoption, but it's not nearly as strong. So we asked the merchants what for them drives digital payments, right? What are the types of transactions and what are the types of customers that they see who are more likely to be digital? On the transaction side, it's really dominated by large value. There's also ones that are regular repeat purchases, and then purchases made from far away or outside of business hours are also a driver. The large value ones, though, seem really to be the place where people say, okay, large value, I probably don't have enough liquidity or cash, we're gonna do it through a digital channel. It may also help with trust. Large amounts of cash can be more of a risk, right? The types of customers tend to be more tech savvy, younger, ones that have wallets and and prefer cash or prefer not carrying cash. And so, there's really a kind of a customer segment that tends to be the ones the merchants associate with doing more digital transactions, and I think going to be the ones that, over the long run, really drive merchant acceptance, or a particular type of customer. So, all right, readiness conditions. So we talked to merchants again about what are the things that enable or hold them back from adopting different forms of digital merchant payments, right? One of the things we wanted to dig into is what's the level at which the businesses have a business license, right? So we observe that a lot of businesses use a personal account. We know that there could be a lot of reasons for that. One thing is that very few of them are actually registered with a license, and so that's part of that may be part of why a lot of them are digital active, but similar number, 3/4 are unlicensed, right? And they're just using their personal biometric ID, personal ID to open an account. So that's one part of it. I don't think that's the licensing doesn't explain everything. It's not so difficult to get a license either. I think both of those things kind of go together. If you have a reason to get a license, you get it. And if you have a reason to get a business-based merchant account, you get it. So national identity coverage, though, is almost universal. So that was not at all a barrier. We look into the barriers as well. So what are the potential things that we could imagine would stop merchants or prevent them if they wanted to use digital from using it? If you look over here, we have things having to do mostly with connectivity, right? So we've got, do they have a mobile phone? Almost everyone has a mobile phone, 97, 98%. Do they have a smartphone? Very high smartphone penetration, so 3/4 of them have a smartphone. Not a major barrier. And then internet usage and strong GSM coverage, all pretty strong across the board. Now, when you get over to electricity, that's a slightly different story, right? So most of them, 60-something%, report having access to electricity, but only 35 or so, 30%, 34% say that the electricity they have is sufficient for running their business, right? So, and that's because 80% of them say they have daily power outages, as I think many of you probably experienced. So, power infrastructure is potentially a barrier. I think a lot of merchants do work their way around that. If they're doing everything on mobile anyway, it's not a huge issue, but it is a challenge. And you can see that a lot of them are using solar backup and generators down here in the bottom two corners. So it does imply a cost on a lot of businesses to be running generators, buying solar, and getting the electricity through alternative channels. So that is a structural gap, I think, in terms of the market. So another thing we looked into are how are transactions initiated, right? So account-to-account transfers tend to dominate. You can see up here that for the dark blue is mobile banking apps, and the light blue are e-wallets. So entering the bank account number is a bit more common for mobile banking apps, and then entering the phone number is a bit more common for e-wallets. Not surprisingly, based on kind of the form factor that they're built around. And those are the two most dominant ways. There's still a decent amount of USSD being used, so those are probably over kind of basic phones, and very relatively small amount of card swiping going on. Although still a decent chunk. Almost nothing happening with QR, and that's, I think, something to dig into as to why QR hasn't taken off when it can be, in other markets where we've done work, it can be a real convenience, time saver, make transactions a lot easier. And so thinking through, what are the things holding back QR, I think would be, a good exercise to go through. The other thing we asked about was onboarding. So how did you onboard to your digital payment account? And one of the things you see is pretty stark differences between banking and e-wallets, right? So signing myself up, agent onboarding me at my shop, or a friend and family member helping me sign up, which is a variant of signing yourself up, all much more common with the e-wallets, right? unique and special about this data is that we don't just talk to existing users of digital payments, we also talk to people who don't use them and merchants who are only accepting cash. And so we can try to dig into, what are the things that are holding them back from moving into the digital, the digital side of the universe. And if you start with about 25% of merchants only accept cash, they don't accept any form of digital. It's more focused in the rural areas, as you can imagine, in the merchants who are doing lower amounts of turnover. As we said before, turnover is a big predictor. A lot more of them are unlicensed, and very few are doing high turnover. So, it paints a picture of what kind of merchants is doing that. One thing, though, that we found was a large number of those merchants, if forced to accept digital by a customer who's going to walk away, can do it often through a proxy, right? So they'll get a friend, the merchant next door, a cash-in, cash-out agent, someone of that nature to accept the payment for them. Now, they don't necessarily like doing that, but often they'll do it to avoid losing a sale. And here's kind of the breakdown of the different ways in which those merchants accept, through these alternative channels. Now, I think what that says is the cash merchant population is not a uniform block. Some of them are actually pretty open to doing digital payments. They're doing them in some sense through a really awkward and not very convenient approach, right? Having somebody pay your friend, your neighbor, not very convenient. So they seem to me to be an opportunity for increasing the footprint of merchants that accept digital. So we also then asked about barriers. And for the cash-only merchants, ask them why are they not accepting. The basic picture that you get for cash-only merchants is we just don't think we need it. We don't see real value, right? The top one is business sales are not too high. I don't think I need one. I don't know how is number 4. So a lot of it is in that category. Supplier demand for cash is another one. So that's a big one that cuts across both merchants who do accept digital and who don't, is that they report, when they pay their supplier, they have to come up with cash to do it. And in order to do that, they'd kind of prefer to get paid in cash often, right? So that's a linkage and a blockage that I think the market can work on. There's an opportunity there. In the merchants who do accept, we ask them, why don't you do more, right? And again, almost all of that, here we're breaking it down, a lot of that comes down to fees. The actual transaction cost, the cash out fee if they need to get cash, transfer fees to pay suppliers. Again, suppliers kind of figure into the picture here. They also report some customer cash reluctance and supplier cash needs, but those aren't very big. Most of it has to do with fees. So I think in some ways this is good news, right? This means that they're using these digital payments. They're ready to accept them. They don't like paying the fees, but does anyone like paying fees? I mean, that's just a very natural human business response. How do we deal with this? I think you can lower fees, but that's not always the best response to people not wanting to pay. Often a better response is to create more value so that they see value and they're willing to pay those fees, right? They're always going to say they don't like the fees, but if you can create enough value that they'll stick with you, I think that's a better pathway for the market. All right, so we wanted to get into, as a merchant, what are the economics of running your business, and what are the insights that can bring us on, on how we can help them make an easier choice. Now, transaction fees hit hardest, as we just saw, so that shouldn't be surprising. Mobile data and internet usage was probably the next biggest. Cash withdrawal fees, so that's another fee-oriented aspect, and sending money. The fourth one down is electricity. So as we saw earlier, there's a lot of challenges with that. I think with mobile data usage and electricity, it's a little bit hard to know. I mean, they report these as major fees for them, but how much is it directly only related to being a digital merchant versus just being a merchant, right? I mean, you probably need electricity if you have lights or a refrigerator or many of the other things that a merchant needs, not just for the merchant payment aspect. And same with mobile data internet, right? So those are going to be critical either way, but I think they're obviously coming up here as important barriers, right? And then the other aspect of it, as I said before, was we know that for some merchants, part of why they want to be paid in cash is because they have payments they need to make in cash. And so we asked them, how do they pay their employees? How do they pay their suppliers? I was surprised. I think there's quite a large number of them that are paying their employees in digital form, right? A lot of employees are being paid through digital wallets, some through banking apps, et cetera. A relatively, I would say, small number in cash. I thought that was surprising, and possibly good news. And same thing on the supplier side. It's almost the same ratio. About 30% of suppliers are being paid in cash. Now, I think both of these are still areas to work on. I think there's a lot that the digital platforms and the tech companies can do to help integrate suppliers and merchants and their employees in platforms that can help them, with stock replenishment as well as payments kind of integrated into a single digital solution. So I think that's an area of potential further growth as well that the data points to. Okay. We've somehow lost a couple of our bullets here on the slide. But the point of the slide was we really went into dig into what are the things that drive supplier preference for cash, and or what are the things that drive the fact that merchants pay their suppliers in cash. So because it might not, there's a lot of factors that could go into that decision, but the vast majority of it seems to be that their suppliers demand to be paid in cash. They really want to be paid in cash, and it doesn't have to do with some of the other potential barriers to doing it. They don't have a bank account, or the costs and charges didn't come up very high, and things like that. So it really just seems like supplier preference. So again, I think that's an opportunity at a market level to build platforms and services that link suppliers and merchants together. Oh, there we go. This is another one I mentioned earlier. I think it's very interesting, right? So 12% of the merchants run social commerce operations out of their stores, out of their physical stores. And when we break that down, almost all of them use WhatsApp, 97 and something percent. But where it gets more interesting, I think, is where they start to use the other platforms as well, right? So everyone uses WhatsApp. They text with the customer. Customer tells them what they want. They get it ready. The customer comes in and picks it up. Things like that. That's pretty standard for lots of different stores. I think when they start doing things on Facebook Marketplace, TikTok, Instagram, where they're selling stuff often locally, so it's a little bit of an online to offline strategy, right? People come in online, and then they often come and pick it up, or they have it delivered. Some of the businesses that are using these other Facebook and TikTok are actually quite different. They're the multi-platform sellers, the ones that are using multiple e-commerce platforms, are a much higher value segment as merchants. And you can see over here, they tend to skew more urban, actually more female-owned, and their turnover is much higher than the rest of the market, right? So the multi-platform digital sellers who are stores that also sell in digital form are a very interesting opportunity, I think, for merchant acquisition in terms of they're obviously very digital. They do a lot of volume, and are potentially good targets for anybody who's running an acquisition business. Okay, we then asked merchants what kind of other digital services beyond the ability to accept payments they would want, and credit was by far the most common thing that people said. So you can see the list of things we asked them for, or asked them about. Insurance actually, very interestingly, came up very high as well. So a lot of them expressed interest in getting insurance for their business or for themselves personally. Not very much interest in things like marketing and promotional tools, transaction dashboards, or data analytics, or finance dashboards, and customer relationship management. So the way I would interpret this is I think they all know they want credit, and a lot of them want insurance. Some of these other things, maybe deserve a little bit of caution, but I also think that if you showed them a good version of what those mean, they might like it more, right? A lot of them have never seen a good CRM system. Small mom and pop shops, they never had one. Why would they want something they've never experienced, right? So I think some of this could just be they've never had something good that helps them. That said, if that many of them are not interested in it, maybe there's only going to be certain subsegments who really find value in it. So we're going to dig in for a second into the credit part too, and I think credit is one of the most important aspects of where the market needs to go. As we said earlier, 64% or so want credit, only 7 or 8% have borrowed, so there's a huge gap. We asked merchants about how much credit they would take if they could get access, and I think what it shows is a relatively small amount, sort of, less than 500,000 is a relatively high number of people who only wanted that much, and sort of 500 to almost 2 million, which, for a small store, that's a lot of money, but it's not a huge amount when it comes to bank loans and things like that. And I think it probably falls in the middle between, local moneylenders and family and the bank. So we do think that's an achievable target. And a lot of the digital platforms, I think, are starting to lend in that space. And then so of the merchants that did borrow, we wanted to break down where they're getting their credit, right? And as I mentioned before, digital transfer and payment apps, digital mobile apps are the two highest. And so those are the kind of the dominant parts of the market right now. Family and friends pops up. In other places where we've done work, family and friends is usually dominant, actually. So I think that speaks to the level of digitization and advancement in the Nigerian market. You see banks as well, but banks, co-ops, and microfinance institutions, are not fulfilling a big part of that demand. So I think I would say there's a lot of potential with the digital apps. They've kind of proven the market. The types of credit that people want fit that model, but there's just a lot of room to grow, right? And so last bit on credit, we did a little bit of a segmentation, kind of similar message. So we broke merchants down into did they have unmet credit need and not borrow? That's the 60%. So those are the ones who said, I want credit, but I haven't been able to borrow. There was a group of about 35% who said, I don't need, I haven't borrowed and I don't need to. And those tended to be smaller, lower turnover, more informal merchants. You have some who borrowed but still want more, and a very, very small number who were borrowed and said, hey, I borrowed and that's enough. So again, I think this points to a real opportunity. There's a lot of even the ones who borrowed, they want more. But maybe one where a lender needs to be targeted and sort of not assume that every single store wants to borrow. There are some who are maybe not that interested. So that's our data. We're going to show you the dashboard here. You can scan it if you want. We're going to show you the dashboard in a bit, but I think we're going to now move to a panel session where we have some amazing guests who are going to discuss in a second what the implications are for some of this data. Yeah. Thank you all. Thanks. And then just so you know, we're going to do the panel, and then we're going to do a demonstration of the dashboard afterwards, and we'll unveil also the report so you can download it if you want and take it home. So, yeah.
Yeah. I hope we're not missing some of our panelists, but I'll just introduce those I can see. Obviously, thank you so much, Jake, for that very comprehensive, very insightful presentation. A lot to unpack, and I trust that our panelists can do an excellent job of helping us to get behind the numbers. And before I introduce my panelists, I know that half of the room are either tired, hungry, waiting for this to be over. But if this should concern anyone, it should concern those of us in the room. The panel session before Jake's presentation talked about scaling payments, and we talked about everything but the merchants who need to grow, who need to find this profitable to be able to indeed scale payments. So if this conversation is important, it is important to us all. And thank you so much, Dotun, for coming on board. I was literally waiting for you. So since Dotun is in the room, I'll just go ahead on the seat already. I'll just go ahead and introduce the rest of my esteemed panelists. And as it comes forward, also let me introduce Mr. Mayowa Ali. I hope Mr. Mayowa Ali is still in the room. Mr. Mayowa Ali is the CEO of Financial Services at Omni Retail, a leading financial services platform powering over 180,000 FMCG businesses across Africa, with over a decade experience spanning fintech, strategy consulting, and technology. Please put your hands together again for my esteemed panelists. Okay, right, as I said, there was so much that we saw through your presentation, Jake, but I'm going to give my panelists a moment, just 1 minute each. Very quickly, what stood out for you? There was so much information, so much data. I know I always say that without data, you're just another person with an opinion, right? So you have an opinion, but you can't prove it. But data lays facts very bare. And, Jake, you were saying that this might, kind of challenge your thoughts around what you think before. But you all have experience on the ground, regulator likewise. What are your initial reflections from the data? What stood out for you? Is there anything that seems off from what you think is the reality? Let me start with you, Mayowa. Please, the floor is yours. Okay.
Thank you. So I think the thing that stood out for me really is that we're basically now past the era of payment adoption, right? I think a lot of that work, a lot of the groundwork has been done to drive payment adoption. And the new vista, and I think where a lot of us need to be focusing on is how do we start to use a lot of that payments data, payments information to drive deeper penetration of, other financial services, right? So things like credit, how do we start to enable merchants to use the information from payments to make better business decisions? I think that's where, we all need to start thinking about, and I think that's the biggest thing that stood out for me.
Absolutely. And Jake, you highlighted that as well in your presentation, is adoption is at over 75%. And those who have been using it are saying that they are satisfied with the service. But then we're seeing that this is not necessarily translating into deeper value for the merchants. Absolutely. Please, Mr. Gang, over to you. Your immediate reflections.
Okay, thank you. My thoughts were that, one, it showed that we're doing much better than we thought we were. Okay. Looking at the data provided, and like the former speaker said, we've moved past the adoption stage, but it also tells us, for me as a regulator, that part of the job that we're doing is working or has worked, and this also provides feedback for policy adjustments. But it also allows me to see the voice of the market, to see the pain points, and know where those issues are to create more efficiencies for merchants. A lot of the time, when conversations are happening, stakeholder conversations are happening, we would see the operators in the room. The merchant is hardly in the room.
Don't look at anyone in particular.
Or the customer is hardly in the room. So this provides that insight and maybe speaks to the fact that we need to get more customers and more merchants, more agents in the room while some of these conversations are happening, so that we hear firsthand and not through
their third-party financial institution that is providing that service.
I
It allows me to
completely
see
agree.
that.
So the voice of the customer being represented for decision making. And maybe a quick caveat. I know we said adoption is at least at 75%. But Jake, in your presentation, you also did mention that part of the individuals, merchants who are receiving digital payments are also receiving cash at the same time. So I think there's still a lot of cash out there, and there's still the 25% to cover. So adoption is, maybe better than expected, but there's ways to go. Over to you, Dodson, please.
All right, thank you, Foy. I think that for me, the data was not surprising. It kind of mirrors some of the internal intelligence that we have. So it was there's a lot of work that needs to be done. So basically, we have built the pipes, but what runs through those pipes is what we have to now look at.
Absolutely, absolutely. Let me come over to you, Jake. I mean, you also, every time you talked about the urban-rural divide, you kind of downplayed it. So I want to hear from you. What do you think this tells us in terms of what is happening in Nigeria versus other climes that you've seen?
Yeah. Well, as I alluded to in the beginning, well, first I wanted to say, I mean, I'm glad that our data is sparking this kind of conversation, that our data can in some level be the voice of the merchant and the customer in the room. It's obviously not as good as having a real person. And also on the point on, sorry, no, I wanted to address one other point, but I'll skip it. So in terms of what we're seeing here versus elsewhere, as I said earlier, the Nigerian market is quite incredible, right? It's very dynamic, it's very high velocity, and I think the rural penetration is something that I was very surprised by. So for example, we did a similar study, basically the exact same study in Ethiopia, and launched it about a month ago. And there, the rural number was more like 38%, if I'm remembering. So, a 30-something point gap.
Right.
And that's huge. And my guess is that if we'd done this study 3-4 years ago, it would have been a lot more like Ethiopia. So I think a lot of this progress has been recent, and then it's a question of how do we consolidate that with the kind of business services, credit, the deeper engagement patterns and business value that we want to see. So.
Absolutely. And you're right. I want us to double click on credit as one of the additional services that we believe that the merchants can enjoy. And to your point, Mayowa, where you said that adoption is great, we saw from the numbers that at least, if I recall, over 60% of the merchants are saying they would be able to do with credit, but only under 10% of them had access to credit. So let's double click on that, for a bit, right? As we've said, and I saw, Dotto, that you smiled when you say, oh, they are satisfied. It makes you feel very happy. That 98.5% of merchants are, expressing satisfaction with their platforms. This is on account of the ease of use and convenience, right? But only 9% say the platform gives them useful payment records. Right? And I was surprised to see that not many of them even thought transactional data could be of value to them. And 4.3 says it helps them to qualify for financial services, the kind of financial services that we're talking about, credit, insurance, and the likes. So payment data, transactional histories, and all of that can serve this segment. Credit is one of the starting points. But what does the next generation of merchants value? What would that next generation of merchants value proposition look like? And how do payment data, like AI, how would they get us there? So I want you, Dotun, to respond to that. So what would the next phase of value creation for merchants look like? And how can AI support us in making that happen?
All right, thanks a lot. Yes, of course, I'm excited about 98.5%.
You should be.
Because I think it is me, not the other guy.
We won't go into that here.
All right. But
I can tell you the numbers.
Your secret is safe with us. Yeah, we won't tell anyone.
All right, thank you. At OPay today, our credit underwriting is mostly driven by, to merchants, is mostly driven by transaction data, their peak patterns, the customer behavior, the settlement mechanisms, and things like, rather than what traditional banks would do. Yes, that's what I wanted to get to. That's where a lot of merchant education comes into play. People are still not aware that I can use my transaction data to then access credit. What we do, for instance, in the OPay app is today we actually inform. So there's data that is coming to you that based on your transaction data, you have access to this volume or this loan amount over this tenor. And the more you transact, that keeps increasing. But there's still a lot of advocacy that needs to happen about this.
Let me press you on that point. Who do you think should be responsible for this advocacy?
I think it's a collective approach that has to happen. While the operators themselves are doing their efforts in making this happen, leveraging the agency banking network to help to make that happen, I think there also needs to be some work from the regulators, orientation agencies, to have this collective approach to making that. The chambers of commerce, I mean, it has to be a collective, collaborative approach to make sure people are aware that you can access credit. The platforms are there. It's easier than you thought. Repayment is simpler than you thought. This is available. That's where we need to get to.
I'm just going to press you on one final point on this topic before I move on to Mr. Gang. To say, were you surprised when you saw from Jake's presentation that only a fraction of those who are taking digital, payments actually see the value of the transactional data? Or is this, consistent with what you know?
It's also actually consistent with what we have, because we do have where we send some of our business developers to encourage and they have to do some work. There's also this fear factor that Nigerians have about credit. So a lot of merchants like, hey, I don't want to touch credit. And so there's a lot of education that needs to happen that credit is not bad. Credit is not evil. There are also religious sentiments about it, right? So what we've done is to change our products to non-interest loans for northern areas. So all these dynamics are things that need to be educated to the public.
I agree with you. Thank you so much. Let me come to you, Mr. Gang. And I want to provide some specifics around, I hope I'm not putting you on the spot. When I ask you to speak to the relevance of open banking, right, and data portability frameworks to create this infrastructure for this transactional data that we're talking about, how can we move the needle to make this work and start already? Maybe that's the question I should ask you. So this is on, open, I'll even say open finance, beyond just open banking, and data portability frameworks. What should the regulator do? What do we need to do to just start already?
Oh, okay. So a lot has already been done. Regulations around open banking have been developed. And stakeholder groups have been formed, where deliberations were, a lot of discussions were had as to the best approach for implementing open banking in Nigeria. Part of that conversation, there were 5 focus areas, and developments happened with additional documentation was developed, which includes an API standard template, a consent management platform, as well as an open banking registry. Now, a lot of that work has gone on. However, there are some risks around implementing open banking. So the approach that we're looking at taking as a market is a phased implementation. So we will get there. It's something that everyone desires, and we know how much it will open up a lot of opportunities and innovation and businesses that will have access to data to be able to build. And but these building blocks needed to be put in place first, especially things. An API template needs to be developed. Consent management, where a customer, regardless of which financial institution you're with, you could give automatically through various channels, give consent for that permission data to be used by an innovator.
Go ahead and say. So I agree with you that it should be open, not porous banking. So I understand the risks that need to be mitigated. Please go ahead.
All right, thank you. To build a user base, to build a merchant base, to now have that data that you've built over the years available to everybody else to build on top of the data that you've spent all your time and efforts and USD foreign investment to build. And so there has to be some kind of framework that is able to quantify.
How do you get compensated for that?
Yes, how do you get compensated for
I guess those are part of the considerations that
Okay,
CBN is thinking
so
about.
that's where the regulator comes in, seeing the bigger picture. Sometimes it's difficult for institutions within their closed environment to see what will be beneficial to the entire industry. We had challenges with implementing a number of initiatives, cashless policy. We had a lot of pushback, and that's where this whole merchant and agency services started from, but there was pushback. People were not using devices. Financial institutions were buying devices and giving people for free, but they were putting it under the counter and not using it. Today, it's a different story, but it started from pushback, and it also started with a vision from the regulator seeing what will be beneficial to the entire industry. Other BVN was the same case. There was some pushback. Requirements around agency banking that provides some exclusivity requirements. Also, the bigger picture is at play. What will grow us? What will grow us as a nation? Grow our economies and create efficiencies around businesses. So the bigger picture is that for institutions that have built quite a large amount of data, there is opportunity for them as well to take from other institutions that also have a
Exactly. It's
tremendous
not
amount
a
of
zero-sum
data.
game.
So, Dotun?
Be open, be open-minded.
Yeah,
That is not-
you need to also look at it. It's a symbiotic relationship. I'll gain from you, you'll gain from me. I'm sure within the market there are people that compete with you that have certain things that you could tap from, and they could also do the same for you as well. And that leads back into one of the keynote speakers that spoke about for the central bank, seeing the larger vision and the bigger picture for the entire industry and the country.
Right. And to see it as growing the pie altogether as against trying to get a larger share of the same pie. I completely agree with you. Right. So let's, go even a bit deeper into the conversation around the persistent cash issue and digitizing this. I've already put out the caveat that yes, adoption is high, but we still have cash as something to contend with. And digitizing this cash will deepen the quality of merchant data, open a broad range of, even richer services that these merchants can, benefit from. I want to come to you, Mayowa. What do you think are the most promising strategies to increase digital transaction depth? So for the 25% that are cash only, and even for the 75% that are still taking cash, what are the strategies that we can use to increase digital transaction depth and frequency? And what would that shift mean for the merchants, the providers, and for the financial system at large?
Thank you. So I think when Jake was presenting, one of the big barriers they mentioned was cost, right? I think in this space that we play, so we're focused on the FMCG space, right? Mom and pop merchants. I think we see a lot of that cost sensitivity very acutely, right? Because generally the margins in FMCG are generally very thin, right? So when a retailer is going to make 5% margin and you're going to charge him 0.5%, right? You're basically taking 10% of his revenues just for payment processing. And that sort of starts to make them very sensitive. Now, on the other side, right, I think, there are obviously costs involved in facilitating digital payments. And so, it's very difficult to go the other way and just say, payments absolutely should be free.
So how do you think we should?
Right? So even though it's paying transaction cost, right, there are other incentives that he can earn, via that device, right? So for example, we're starting to work with FMCG manufacturers to say, how can you provide cashbacks, incentives to retailers, right, who can collect data for you via those POS terminals, right? So the retailer starts to see that device beyond just something that just costs me money, but now I can actually make a lot more money for.
And how's that
device.
panning out? How is that gaining traction?
It is still early days, so we're still in a very small, closed pilot. There is also a lot of work to be done on retailer adoption, right? So today, retailers are not used to capturing sales information, right? So because a customer walks into my store, they want to buy something, I can pick it up, give him. It's a lot more straightforward, right? Now you're introducing one extra layer, and say I want you to punch in the sale, into that device. So there is a lot of education that we're having to do, right? But the one thing that we've seen that is very positive is that retailers are responding well to the incentive, right? The fact that I can actually earn money on every sale is very positive for them. I think that's one example, and it's all about just thinking about the retailer's incentive. Like, what are the things that incentivize retailers? Credit is another thing, right? As much as we talk, that they're still carrying risk, right? And a distributor might be willing to give a lot more credit to a retailer, right, if he knows that there is some other party that can facilitate collections or repayments for him, right? So tapping into those like informal networks, right, and using, for example, distributors to influence the retailer behavior is something else that we're also actively working through.
Amazing, amazing. Let me come to you, Doctor, and I'm going to come back to you, Jake, in a short while. So as a platform, right, and with significant reach into both urban and rural merchant segments, where do you see the most, I would say, tractable opportunities for converting the cash transactions into digital, payments? And what products or commercial innovations are most likely to make this happen?
All right. Thank you very much. As we look at getting this 25% out of doing cash-based transactions and pulling them into where they would do digital payment, is still about a number of things that can be done. I think that for merchants, when we do maybe a supplier pool scenario where, because the suppliers are insisting on digital payment, you also adopt digital payments, that will go a long way to move the labor. Secondly is where we look at zero fees or zero cost transactions, especially for low end transactions, where these fees are zero, then they get more and more ready to adopt this digital payments. The other area, and that's why we do this incentive, sometimes people say that on OPay, you see first 3 transactions are free, or things like that are things to pull the customer, to pull the merchant into the ecosystem. A third area will be in the area of trust, really, which is about, I thought someone mentioned that trust should not be marketed, but trust is really important to be marketed because it's a real issue.
But you can't market trust, you deliver trust,
because, yeah,
enhancing.
you have to deliver it and then market it, because it is an issue. Customer redress mechanisms when things go wrong are real challenges in the ecosystem. That's why some people stay on the cash side. And the fourth area I would say is...
Jake, what do you think? So I know we've heard from the operators, but in your experience as well, also from this surveys that you've done in a couple of countries, what do you see as the game changers around actually digitizing this last mile of cash?
Yeah. So, I mean, I have to say, I agreed a lot, with what you just said around, lowering the transaction cost, and I think considering free is I know there's a lot of reasons not to do that, but as a dominant market player, that actually may help you more than others. And I think where you've looked at free, especially P2P transactions in other parts of the world, India, Brazil, you see a dramatic expansion in terms of who's willing to use it. There's something about free. You can get as low as you want on cost. It was the same way when they made SMS free in European or American markets, you know, in the early days, you used to have to pay by the SMS, and people would make these really long SMS, and they send one, you know. And now, what do? Every 3 words, you just hit send, and there's SMS volume spiked and went through the roof, and made it, you know, the day-to-day communication thing that it is, right? Same with WhatsApp when it was free. And you see that in a lot of different product areas. Economists have done these, you know, research. Free is something different psychologically, and I think that in other places, and it's quite easy, right? And speaking to the point of how do we make, you know, digital like cash? I mean, boom, you know, scan your thing, put your QR code. It's almost like cash. It's almost easier on some level. And so, you know, going back to the QR code, because I think it's you know, it's largely just not succeeded. Going back to the QR code and saying, okay, how can we, you know, bring this back and maybe make it a more daily kind of occurrence and build it into the different platforms. That would be something I you know, personally I would look into.
And 2 thoughts come to mind. The first would be trust, because there's also the trust hurdle to overcome, and also the fact that there's the low income, irregular income issues to worry about. So when we talk about people being very price sensitive, we shouldn't rule out the fact that Nigerians are dealing with real economic, you know, situations, right? Merchants, you know, nonetheless. So we're going to turn it over to the audience, if there are questions, maybe, you know, short reflections before we take, you know, the final round of questions. I see one hand here. Who's helping me with the mic? This is another hand. I'm just going to go take all the questions so we can respond to them real quick, and then we'll take the final round of questions and we can call it a panel session. So there's one hand, the lady over there, and the gentleman right here. Any other hand before we close that? So just 2 questions here. Let's take those 2. Oh, okay, one more. So 3.
Good afternoon.
Short and sweet.
Yes, ma'am. Thank you for the privilege once again. Thank you, Jay, for that beautiful presentation and that data. My first question is that document, is it available publicly to be downloaded? And how can we access the document? That's the first question. Then the second one is about, I mean, I saw how adoption for QR is still very, very, very low. So I really don't know why that is or what the problem is. So I would maybe like you to speak to that from the adoption perspective, basically. Thank you.
Yeah. Should I answer now? So thank you, and appreciate that. The report, I'm going to put up a QR code in a second, and you'll be able to download it. I promise we're not releasing it at the end of the session to make you all stay, but that might have had something to do with it. So we're releasing it at the end, and it'll be online as well. So, and as I said, we're also going to demo the dashboard so you can do your own data cuts. On the QR question, I mean, honestly, I have to say I don't know. You know, I've seen in other markets QR codes take off, and I haven't done a deep enough analysis to understand it here. I think certainly in our data, there was just so few respondents who said they used QR code. We couldn't really even analyze the question of, you know, how are they different than the others or anything like that. So, but I think it's a very interesting question, and we'd love to dig deeper on it. So maybe we'll do it with our partners at Afina.
So obviously the jury is out on that. We just need more information. Maybe that's the next thing we should think about. Yes, please go ahead.
Thank you very much. Good afternoon. My name is Juliet, and I work in healthcare. So I wanted to talk from the angle of concerns by merchants, of course, charges, countless charges. So you have the CBN charge, then you have institutions. Oh, no? We'll come back to that. Because, yes, because sometimes you hear things like, you know, CBN is regulating it, so they say we should do this. Unless you're saying they're lying, because the charges are there, unless you say they're lying, then you also have the institutional charges, I mean the service providers. So charge. How do we deal with that? Is there any regulation by CBN that says this is what you should charge, this is what you should not charge? Because whether we like it or not, there are charges. And sometimes they say, oh, I spoke to one of your exhibitors, I don't want to call them out, and they said the only thing we take is what CBN says we should take. So I don't know if I should call them out, but somebody still said that to me today.
Please, let's not name and shame at this event.
Exactly. So,
thank you.
Because the CBN man shook his head. So the charges are there.
So let's
is there any regulation?
Let's give him a chance to respond.
Okay, thank you.
And I think, Dr. you should get a go at that question as well.
Okay. Thank you for the question and the feedback. There's no CBN charge for any transactions. And CBN has a document called the Guide to Charges by Banks and Other Financial Institutions, which provides a maximum cap for how much a financial institution can charge you for any type of transaction. And in that, you will find where there's an MSC fee. So there's a cap of an amount that can be charged by a merchant, and they pay that fee. And that fee is shared amongst the financial institutions that enable that transaction to happen. So it's compensation to them for providing that service and there's a cap. Without CBN, believe me, they would have been charging much more than that. CBN had to step in and put a cap and ask that nobody should charge more than these amounts for these types of transactions.
I guess the short answer is they cannot charge beyond what is allowed in the guide.
How do we know what is the maximum? How do we access that? Is it accessible to merchants? That's one. Yeah. And then I have something else that is really, really a concern to me for people like me that work in healthcare. I'm so sorry. So we generate very sensitive data, very sensitive, precise. So, okay. Thank you.
So financial transactions, we understand the concern around anonymity and privacy. But if a transaction is made, for instance, is it the concern that somebody else may see it? Or is it that someone when the payment is being made, or the financial institution itself?
Okay, so let's say a client wants to buy something very intimate. So they don't want the person to know. Why are we laughing? I mean, I just told you sexual and reproductive health. Do you want me to be explicit?
No, it's okay. No. It's okay.
So a client wants to order something or wants to pay for something. And then, ordinarily when you're paying for something, there's a place where you say description or remark. And whatever you're putting there is already very sensitive. And this person doesn't, wow. Thank you. And the person is uncomfortable for obvious reasons, for understandable reasons, because it's sensitive. So they are saying we want anonymity.
And it's impacting your business. So the question is there...
Now I'm saying regulators will also ask me, give us data. And now my clients want anonymity. I mean, you could be my client, and I'm sure you would want anonymity. So thank you.
Do you have a response to that?
Yeah. So I'm not sure how to answer that question because for the good of the customer as well, that information is also required. What if something goes wrong? What if somebody hijacks their information, or some fraudster, or you need that information to be able to investigate, to find out what goes wrong. So we can't just look at it from the perspective of privacy alone. You have to look at it from a security perspective as well. But I do know, maybe Dr. will speak on that as well. That information can still be there, but I believe there's a way a financial institution can go about it. But when the information is required, it's not as if it's hidden, it can be available. But I would really be curious to know what...
Yeah, I guess the answer is not cut and dry because there are many considerations beyond privacy that you've talked about. Do you want to take a step?
Okay, yeah. Maybe just to answer the two questions. I think the first one on... okay, let's start from this one about privacy, right? When a transaction occurs, it goes through several institutions, actually. So you have the switches involved, you have the card issuer, you have the bank or the payments institution that owes the deposit. You have the merchant's institution, the merchant's bank. So there are several parties involved. And to achieve traceability and uniqueness of the transaction, every detail that is necessary needs to be captured and stored across all those channels. So even if you say it's anonymous to you, it's not anonymous to several other parties across the ecosystem. And for national security reasons and investigative reasons, it's important that data is captured and stored. So that's one thing. However, in the platform that offers you service, that owes the deposit, it's possible for that data to be hidden so that without login credentials and things like that, nobody can have access to that data. So that data is protected in that sense. On the previous question around transaction charges, maybe you did not know this, but Nigeria, so kudos to the CBN, Nigeria, as far as POS transactions are concerned, Nigeria has I don't think there's any country I've gone to in Africa or in the world that has a lower cap than Nigeria. So 0.5%, so I tell you explicitly, 0.5% is the cap MSC, that's merchant service charge, that can be charged on POS terminals in Nigeria. Across the world, even if you go to West Africa here, you find 3.5%. So Nigeria is already doing very well in terms of charges, better than anybody else is doing. And then you still have operators still offering you first number of transactions are free. Okay. So we're already doing a whole lot. And we have to maintain our systems. Thank you.
Okay.
Lower part of the pyramid, right? We're trying to get in the upper part, but it's very difficult, right? But what I will say to you is this. The poorer people pay back their loans. It's the richer people that call you for a negotiation. So MPLs are not a problem.
Okay. On that note, I just need to take this final, because we're wrapping up now, right? So we need to move from this insights that we've seen into real action. And I want to start with you, Mayowa, right? In 3 years, what do you think the merchant landscape that has truly covered and conquered adoption to integration, what do you think it would look like? And what do you think that would mean for commerce and growth in Nigeria?
Yeah, so I think that it means a couple of things. I think one is a lot more deeper credit adoption, right? I think credit is probably going to be the theme over the next 2 to 3 years, right? Is how do we take transactional data, purchase data, and drive a lot more credit among retailers. I think secondly, and I think Dotun slightly touched on it, is also, that beyond retailers and merchants accepting payments from their own consumers, right, that we start seeing, much more integrated payment ecosystems where even their own supplier payments are also fully digitized. And so, merchants don't really see the need to go from
cash.
digital back again to cash. And I think the third thing is also then that we start to see, a lot more merchants going from just digitizing their payments to digitizing their sales, right? I think that's when, we can start to see a lot more, start to use the transactional data merchants to digitize their sales and use that data, in their operations.
Right.
I think the biggest shift, from an operator standpoint is investing a lot more in that retailer education, right? I think
similar to what Dr. said.
The adoption is, the willingness is there, right? There are fears. And so just, having someone that goes there every day, tells them that, credit is good, credit can grow your business, share the sentiment with Dotun that, MPLs are very low, right? Retailers generally tend to pay back, and they generally tend to be very honest people.
But I don't know, I even feel that from the data that maybe the hesitation or reservation towards credit is not as, it's not as endemic with the merchants, because the merchants are saying over 60% say they need credit. So maybe it's more like maybe average individuals that is a concern with. Let me move over because we are actually at time or beyond time. Let me come to you. So in this order, I'm going to give you, Chai, the last word, as the regulator. So I'm coming to you, Jake, and then to you, Dotu. So Jake, to you specifically, right? Because now we're moving beyond insights. In 3 years, what do you think the wave 2? Let's look at wave 2 because now this is wave 1. What do you think wave 2 on the field would look like? What do you think you really wanted to show the most? And what would that tell us about whether we are moving in the right direction? So what key data points are you, curious to see? And what do you think that would tell us about where we are, where we're headed?
Thank you. Yeah. That's a good plug for Wave 2. It's coming. You can follow me or DFS Lab on LinkedIn to see when it comes out. I think for me, one of the things I didn't show very much, but one of the data points that we do have is the amount of cash versus amount of digital at already digital merchants. And as someone alluded to, you know, and as I said earlier, you know, a lot of the merchant adoption is relatively shallow, right? Some merchants don't do very much of their business in digital form. They do a lot of it in cash. They're used to it. Most of their customers are used to it. But we do see in that data, and you can get it from the report, there are already an emerging category of merchants who are very digital, right? Who are claiming to do more than 75% of their transactions and cash flow in cash, in digital rather. And so that would be one metric I would really love to see move, is not just adoption, and I do think, you know, more adoption going further down market and further into the rural areas and that kind of thing. But, you know, we're done very well on adoption. But I really think if you start to see those merchants who are doing 50-70% of their total flow in digital form, that's going to be very...
What should it look like?
1 minute. All right. So I think that the biggest thing that we need to move that will really turn the tide will be when a whole lot of these merchants who are mixing up their personal accounts with their business accounts begin to shift towards more of the business accounts separate from their personal account. That will help us to be able to do more, to lend more, to offer better services, to offer additional services that will really turn the tide and make their business.
I wish we had
better.
time to press on how we can make that happen, because that itself is not, you know, a dash, it's a marathon. And finally to you, Chai, right, because I said I was going to give you the last word. From the regulator's perspective, what do you believe the ecosystem should prioritize now, right, to ensure that we can deepen merchant payments responsibly while supporting inclusion, innovation, and basically broadening Nigeria's economic growth? What should we prioritize now?
I think for service providers that provide merchant services, I think it's to have a more intimate relationship with the merchant, understanding what their pain points are. Like the statistics show that I believe less than 9% or about 9% have access to credit, and credit has the potential to expand. I believe Nigerians are kind of, some scared of credit, but if it's understood or you're educated in a way that you know that this can expand my business, and a payment plan is built for you where you pay back comfortably, is the thought of you owing. I think that's what scares, but credit can actually help expand the economies of not just the individual, but their communities. So if it's provided and educated in that way, and service providers and financial institutions have more intimate relationships with their customers, I think they would be able to provide not just the services that they are able to provide, but are able to provide a whole host of other micro-financial services to those merchants, which can expand their economies.
Absolutely, absolutely. So I guess the key word here is be close to your customers. You know, we talked about consumer behind the data. Thank you so much, gentlemen.
BD. Yeah, I think we're done. Thank you all so much. We really appreciate it. That was very insightful. We're doing a picture?
Are we doing a picture?
Come on.
Are we doing a picture?
So, as I promised, we're going to do a quick demonstration of our interactive dashboard. VT is going to take over for that. And just so you know, VT has been the project manager who has run this project for more than the past year, I think, and has done an incredible job of making all this data come to life. So give her a round of applause if you would. I appreciate that. Yeah.
Thank you, Jake. Right, so while the dashboard is loading, thank you so much for the esteemed panelists for an insightful discussion.
Take this one, I think it's louder.
Okay. Oops. Why is this? Can you show my screen?
Minor technical difficulties. Illustrating the challenges with going digital, I think. So while they're working on that, maybe I'll just preview. This is going to be a multi-wave study. So like I said, do follow us on LinkedIn. You can go to the website and download this version. There'll be new ones coming out and more research using some of the same data. We did a session about a year ago to get feedback from a number of you who I see in the room even. And we're going to be doing something similar again in order to design this study and make sure that we're tracking the things that are most important to the local ecosystem. So if you want to be part of that, again, follow us and we'll send out some invites to that when it happens. It should be in the next 4 or 5 months, I would say. But we'd love to get feedback on that. And if you just want to send us a note through one of the many channels, that you can send notes on these days, that would be great too. If you have an idea for what we can do with this, because we really do want it to reflect the local, obviously the needs of the ecosystem itself.
Thank you. So this is our dashboard that we've created based on all the questions that we asked in the survey. So you can interact with it. You can basically toggle all the questions that were asked in the survey, and you can also use a couple of filters. So we've divided the data into the market overview, merchant segmentation, payment and providers, barriers and friction, and beyond the counter, which includes value-added services and questions around credit. So this study is done in Nigeria and Ethiopia right now, and we also have Pakistan, so you can also compare the countries and see how these countries are performing, right next to each other. And you can look at all the data views, filter it by geography, urban or rural, by gender, male-owned enterprises, female-owned enterprises, by age, youth, 31 to 55 years, and so on. And you can toggle across different views. So for example, in merchant segment, I think we need to refresh it. A lot of technical glitches right now.
It's okay.
So because of technical glitches, I'm just going to share the QR code, and you
Okay.
can scan to read the report as well as access the dashboard. It's available for public use. So yeah, feel free to, toggle the dashboard and go through different views and also explore our filtering options, which are a lot more beyond age, geography, and location.
Put the QR code back.
Yeah.
Okay. Yeah, sorry. Live demos are always a challenge, aren't they? But I promise you, if you go online, it does work, and it does give you a lot of flexibility to bring your questions to the data, right? I mean, we put ours into the report and that kind of thing, but your particular question you can come and answer. So we hope that's a real resource, and let us know, if you find value in it or if you have ideas to improve it. So again, thank you all so much. Thank you to our panelists and to our great partners at Athena again, and thank you all as an audience. This has been wonderful. We'll see you in a year.
Good evening, distinguished guests, ladies and gentlemen. It's still day one of the 2026 Digital Pay Expo. It's been quite an eventful and long day, and I must commend our dear audience for staying with us all the way. I'll swiftly move on to the next agenda so we can pack in as many things as we can with the little time we have left today. We've split this into a two-day conference, but it still seems there's never enough time. I'd like to invite the marketing director of WiseCard, Suvi, who will be doing a product demo. Please, let's put our hands together for Suvi from WiseCard. Thank you.
Oh, sorry. Where's my slide? Yes. Okay. Thank you. And the checker is, which is the checker? This one? Finally, it's my turn. Hello, everyone. It's so lovely to see you all here today in Nigeria. My name is Suvi, and I'm responsible for global marketing and WiseCard. Yes, WiseCard technology has been serving in Nigeria for many years. And for 15 years, WiseCard has been committed to making payments easier and safer for our users around the world. And our mission has never changed. And we keep pushing ourselves to improve better and faster. So today, right here in Nigeria, we are so thrilled to launch a brand new payment solution, okay? And this is Envoy, a smart ring that brings the future to your fingertip. And there's no more better time for it. The smart ring market is $697 million now, and projected to hit $7.8 billion by 2035. So it's more than 10 times growth in a decade. And the demand is real and booming. And let's see who are playing. Aura from Finland earns 80% of the market on smart ring, but it only focuses on health tracking. It does not support the payment feature. And other players like Ultrahuman, Samsung, Rincon, all health, no payment. So every brand existing now, they choose their own track, but none of the brands have combined the core capabilities all together. So where does Envoy stand out in this market? Actually, there are three main shifts that are quietly taking place right now. Firstly, NFC payment is no longer a new and fancy technology in daily life, and it has become the default choice for people. And second, the health tracking. It is no longer a tool for professional athletes. It has been a necessity for ordinary people. And most importantly, people today are tired of carrying a bunch of stuff like wallets, cards, keys, fitness trackers. So all these three trends are pointing to one clear and smart payment solution. That is Envor. This is Envor, and it's built on the infrastructure that banks already trust. And beyond the basic step counting, Envor can support health tracking. It can monitor your physical conditions automatically and continuously. And all these features can be tokenized. All these features can be linked with a smart application, which is developed by Wisecard team. Okay. So behind every tap is one thing that matters most, which is security. And each time you tap with Envor, your real card number will be replaced by dynamic token. So your actual details will never travel the network. So every transaction is unique and every transaction is protected. And now Envor can support 5 major card schemes: Visa, MasterCard, Verve, Afrigo, and China Union Pay. So wherever you are, however you pay, Envor has you covered. So you must want to know, how does Envor work? Actually, it's simpler than you would expect. Okay, just put on the ring and open our mobile app, log in and activate the ring on our app. And then you are all set. So let's get back to the beginning of the story. The next time you are going to check out, you don't have to rush to look for your wallet or your phone, just tap with the ring. Envor doesn't just handle the payment side, it listens to your body. So your blood oxygen, your heart rate, your sleep quality, your daily activity can all be updated by Envor automatically and continuously. Actually, your body has always been talking, and Envor just helps you hear it. Now, let's talk about Envor itself. Envor can be fully customized. It supports various materials like alloy, titanium, ceramic, stainless steel, with various color options to perfectly match your daily style. And it boasts a 7-day long battery life, and it supports 10-meter water resistance. And Envor is very light. It weighs only 2 to 4 grams. It's so lightweight, so you can never find an excuse not to wear it. So now both the payment side and the health tracking side can all be realized in our mobile app. So Envor mobile app can track everything, your body and your money. So what do you care about your body and money, all in one place and all on one finger? Let me walk through the comparison slide. The ordinary NFC feature is only locked in access and payment features. And the smart rings, which are existing on the market, are built for health tracking only. And none of the brands have merged all the core functionalities altogether. So please shift your eyes to Envor. Envor brings payment, health monitoring, and AI insights all in one ring, all in one mobile application. So the better technology is that kind you don't notice. You don't see Envor working, you just wear it and feel the convenience it brings to you. And the great technology is only half the story. And the other half of the story is knowing who it's for. And here we have identified 3 kind of people who will never leave Envor without, who will never leave home without Envor. The first one is the tastemaker. These kind of people, they choose their coffee shop, their outfit, their tools with the same level of care. And for them, Envor isn't just a small gadget. It's a kind of statement that they don't have to make out loud because they don't follow trends. They are the trend. And the second is the health conscious. Health conscious, they stick to morning workouts. They always keep an eye on their sleeping quality and their physical conditions. So they don't just collect random health data for fun. They are using the data to live a healthier and a better life. And our Envor mobile app, it supports the payment, the health tracking, and it also generates AI daily health report every morning before you even ask for it. So for health conscious, this is the must check for them every day, a perfect start to every morning. The third is for the true minimalists. These kind of people, they are tired of carrying a bunch of stuff every day. And the things for that testing, actually there are lots of users who are willing to or to be their proposal rings. We all know that the traditional engagement rings are beautiful and romantic, but yet offer no real and practical value in daily life. But Envor, it's totally different. It's worn on the same hand, and it can stand for eternal love and the real lasting responsibility because it can track your partner's health condition all the time, as well as supporting the daily easy payments. There's a fun truth that boys intend to say about love, but real men, they are willing to show it and pay for it. Okay, this is a joke, but ladies here, please bear this in mind. Meet a real man, not a talkative boy, okay? Will add more and let him to pay for it, okay? So, and just a quick note, I'm just wearing this for demonstration. I'm still single. So gentlemen here, you still have a chance, okay? Okay. So this is a quick review and presentation of Envor. Actually, Envor is officially launching in this month, and the technology is ready. The product is fully ready. And if you have been agreeing what I have shared today, it means you are ready too. And we are looking for the right partners in Nigeria. And I hope you could be part of this to building the future together. And we think the future is something you wear on your finger. Thank you.
Thank you very much once again to Wisecard for that interesting demonstration. I found that very engaging, especially the proposal. I wish I had had that type of wedding ring or engagement ring myself. So we are coming closer to the end of the program, just 2 sessions left, if you'll bear with us. And I'd like to announce that at the end of the panel, which will be right after this keynote, we have the opportunity for any of the distinguished guests here to win some fantastic prizes from our sponsors and partners. So please do bear with us. We're rounding up soon. Right, so our next session is our keynote on SMEs as the growth engine of financial inclusion. It focuses on a sector that remains the backbone of virtually every economy on the continent. SMEs account for the majority of businesses across Africa and remain one of the most important drivers of job opportunities in technology-driven transformation. She has led initiatives focused on innovation, operational excellence, and digital inclusion. Her leadership continues to strengthen Sham's role in Africa's evolving digital economy. Please do give a resounding round of applause, please, for Mrs. Mayowa Olanio, GMD of Shams Holding. Thank you. Thank you.
Good afternoon, special guest. And thank you so much, the organizer, for giving us the opportunity to be part of this great event. I'll be talking on SMEs as the growth engine of financial inclusion. Please permit me, before I go into it, to briefly share with you the story of Amaka. Amaka runs a tailoring business in Nnewi. She employs 6 people to work with her, and she has been in business for the past 11 years. Just last year, during the festival session, she approached bank to get just 5 million naira to buy some fabric ahead of the festival period. But behold, she was turned back. Not because the business failed her, not because she doesn't have the capacity to generate money and repay back, simply because she couldn't make the bank's requirements. No audited account, no collaterals as specified by the bank, and the light of that. Behold, she turned back and went to the cooperatives and pulled other 7 women together. They put money together, and she was able to get some amount of money to get the fabric and went for the business. Yes, she made good money, but she left some potential revenue on the table as she couldn't get sufficient amount from her colleague. Who is Amaka? Amaka is not exception. Amaka is Nigeria. Amaka is the SME that we're talking about today, the growth engine of the financial inclusion. Amaka is one of the 39.7 million SME in Nigeria that created 84% of jobs that exist in this nation. And yet, she couldn't access the credit facility from the bank. And CBN survey actually confirmed it to say 6 out of 10 SME in Nigeria, they are unable to get bank loan. And went further to say 38% of adults are still excluded from bank facility. What has that done for us? In the $35 trillion, just because there's no credit history and where there are a lot of transactions in place, just because there's no audited account, but the fintech has the data, just because there's geographic barriers and people could not do. So the summary is that we have gotten people's accounts, but we have not gotten them capital. Despite the bank has their cash, has their money, but they are unable to give them capital for their businesses. SME are the engine. They are not passenger. I would like to take another example. Let's look at M-Pesa in Kenya. When Safaricom extended financial service to small traders, merchant payments grew over 90% in Kenya, and the GDP increased accordingly. I know we have done a lot in Nigeria, and I indeed applaud Money Point, Fair Money, and others. We started as merchant payment platform, now serve over 2 million businesses by giving them POS, enable them to accept credit and get data that they could use to access credit facility. However, that is yet insufficient. However, that is yet insufficient. There is a lot more that can be done. I know we all can see the multiplier effect. We can see a trader in Balogun, besides selling a cloth, still using the POS for cash in, cash out, collecting it, and doing the great job of last mile inclusion. Data as credit worthiness. Carbon and Fair Money has done a great job in this area. Though the SME could not produce their audited accounts, but they can produce 6-month POS. Despite that the system, the fintech has done all this, why do we still have this gap persist in view of what they have done? I can say for now we have collateral mismatch, but the kind of asset that is in place is not what banks are actually expecting. Data invisibility. Amaka, in 11 years business experience, the receivable, the payable were in her head as well as in our WhatsApp. There's no way to formalize that kind of transaction. Product design failure. Yes, the bank has designed products for SME, but they expect people that will pay on monthly basis. Behold, some of these SME are not like that. A tailor will have his own season during the festivals and like that, and a lot more. Then the trust deficit. This is actually paramount and all over social media. That I have taken 100,000 and they're expecting me to pay back 500,000 and the like. Nobody knows the real fact. And this is preventing some of the SME from going further to take money from the fintechs. So, what are the models that could work? Those models that could work are merchant data as credit score. As I said earlier, Money Point, Paystack, all of them are doing a fantastic job in this area. But how can we make this work? How can a regulator put a framework behind it to this facility? This is area we need to work on. Embedded finance. A trader on Jumia doesn't apply for a loan. They see a working capital offer on their dashboard because they belong to that ecosystem. And they could track their transaction, and then automatically, they were even being asked if they need loan, it will be available for them. Can we do a lot more of this on other ecosystems where we have SME? Cooperative digital bridges. I said when Amaka couldn't get money from bank, it went to cooperative women like her, and she could pull some money together. And she could put some money together. This can be digitalized by some MFB and business wallets for them to be able to have more money. Then at the same time, funds can be given in clusters-based approaches. Call to action. What industry regulators and fintech must do together? How can they assist this aspect of economy that is providing food for 80% of the people in the economy? How can the regulators, the banks, the fintechs, and the governments work together to ensure that they are really supported? They are able to give them money, since they are the engine of financial inclusion, not just the users of app. I know definitely Lagos is highly indexed with a lot of nice apps. There's a lot of financial products for the salary earners. but the structure of cash flow of SME doesn't go in that line. How can we take them into consideration and fund can be made available? Invest in SME first products. Microloan tied to transaction data. How can bank get this done? And then regulate for the government. How can they regulate for assets? Regulate for innovation and not only just for control. Shams in action. How is Shams powering inclusion and powering the engine which is the SME? What is the support that Shams is making available to the SME? We have a mobile money named Kego. Our mobile money wallets go beyond payments, go beyond POS. We have the SME that can run bulk transaction. They can run payroll for their staff. And based on that, bank can have idea of their transaction and the details of their payment. It's not only to receive money, the expenses, the recurrent expenses can be made on that Kego mobile business wallet. Then for payment infrastructure, we have a platform for cross-border payment with China with UnionPay. We have a system partnership. And for the SME that travel, they seamlessly make their transaction. And they have a rail to make their payment and at the same time have their credit history. Data for access. In conclusion, if we treat SMEs as users, we will continue to build nice apps. But if we see them as growth engine that actually ensure inclusion through their ecosystem, what we build for them is infrastructure and not just a nice app. The next 20 million included Nigerians will come through embedded finance, just like what is obtainable on Jumia today. Cooperative digital bridge, just like what is to power that. Thank you.
Thank you so much, distinguished guests, ladies and gentlemen. Please, let's put our hands together for Mrs. Mayowa Olaniyan, Group Managing Director, Chams Holding Company, Nigeria, speaking, giving remarks. We'd like to swiftly move on to the next agenda of the day, which is a panel session, a FinTech panel session on the topic SMEs as the growth engine of financial inclusion. And the distinguished moderator for this session is the Director, Partnership and Business Development, ERCAS Integrated Solutions Limited, Dr. Chinyere Tonioke. Please, let's put our hands together for her. Yes, thank you very much. That's more like it.
Okay, good afternoon, everyone. Unfortunately, the hall is looking empty, but I know that we're going to have a good time. All right, so before we start, let me invite the panelists to come and join me on stage. The first person I'm inviting is Robert Magala, but he's joining us virtually. He's Digital Finance Innovations and Marketing Specialist in Uganda. Unfortunately, he was not able to make it down here, so he's going to be joining us virtually. Robert, are you there? Can you hear me? Is Robert there? Okay, while he's getting set, let me invite other people. The next person is Chikanwosu Managing Director, Pampe, Nigeria. All right, as he comes off the stage, I also
Can you hear me?
Okay, Robert, are you there now? Let's welcome Robert. I think he's trying to speak. Okay, while we wait for him, the next person is Akimbola Asalu. That is Chief Executive Officer of Activate Nigeria. Let's welcome him to the stage. I also have Ayodele Ojoshigbe, Head Business Development and Relationship Management, Development Bank of Nigeria, DBN. Let's welcome him to the stage. Welcome. And I have the last but not the least, Dr. Olawale Anifowoshe, Managing Director of the Global Entrepreneurship Network, Nigeria, and Director of Programs and can, attest to that story. And we know across Africa, across Nigeria, we all can agree, even from the keynote speech, that SMEs are actually critical enablers of our economy, right? But unfortunately, we also can say that these SMEs, even though they are critical contributors to our economy, there are still a lot missing. We have a lot of gaps trying to bring them in the financial inclusion. Today, we are going to be looking at how we are going to be leveraging technology, how we are going to be leveraging policy making, and of course, collaborations to see how we can draw these SMEs to participate effectively in our financial inclusion drive. And for us to move fast, I will start with you, Chika. And I'm going to be asking you this question, particularly from your experience in Pampe and what other players like you are doing in the economy today. And we know that we've been building solutions to see how you can bring on board and how you can bridge this gap. But I want to ask, from your own perspective, why are SMEs so critical to achieving meaningful financial inclusion across Africa? And what opportunities are we missing if we are not serving them rightly and effectively? Thank you.
Okay. Good afternoon, Chinyere, Dr. Chinyere. And thank you so much for that question. Before I go ahead to answer this question, I want to also draw an analogy to collaborate what Group Managing Director of CHAM said. For instance, we have a woman on the street of Oshodi who fries akara. And every time the customers come and ask her, I want plantain. Do you have fried plantain? Do you have fried yam? This woman, if she buy beans for the akara, she cannot afford to buy plantain to fry, and she cannot buy yam to fry. And maybe she has only one frying pan. She doesn't have two to fry all of them at the same time. For this woman to scale her business, maybe the working capital she has is just 50,000. She needs maybe like 150,000, but there is nowhere to get this money. She cannot scale the business, and she cannot satisfy the customers effectively and efficiently. Okay, put it this way. This woman approached a fintech or a bank for a loan of 200,000, and they gave her this money. She was able to bring she was able to buy the plantain, buy frying pan, buy extra stove. She will need extra hand of maybe like 2 or 3 more persons who will help her to fry and who will also help to sell. Because most of the time when we talk about the impact of the SMEs in the economy, many of us may not understand it. So this is one. This is how SMEs can help to the growth of the economy. In Nigeria alone, SME contribute over 40% of our GDP. Then let me make another analogy. Could you imagine where you remove something that grow our GDP by 40%? Our GDP is about 380 billion. Remove 40% of it. What happens to the per capita income and what happens to the economy? Even the major businesses that are contributing to the development of the economy will not invest their money into that economy because the purchasing power of the people will go down. So for us in Pampe, all we have been doing this period, all these years, is not just to provide a payment solution to these people. We have also collaborated with the partners to provide financial support to the SME. Because if you go to the market and ask any SME, ask them 3 questions. That 3 questions you ask them, the answer boil down the basis of the solution of that 3 questions, the answer is finances. So that has been the problem. So we have continually to support, to provide them this finance to bridge this gap. Thank you very much.
Thank you very much, Chika. So Chika is telling us for these SMEs to thrive, there is need for support. And you are saying that Pampe is one of the things that you are doing to, support them, knowing fully that they are contributing to our economy. If you are thinking about over 40% of our GDP comes from these SMEs, so it is important that we, support them. Now, before we dive deeper into the issue of funding, one of the critical areas that we've also noted, even from the keynote speech, is that one thing that is lacking among the SMEs is that they don't have records. And that's one of the things that is, the problem that they are having, And so we are asking this question along the digital onboarding and inclusion because we want them to come on board. Because if we want to extend this funding to them, which data are we going to leverage to make them to, be able to get access to that fund? This question is for Robert. I don't know whether Robert is online. Robert, can you hear me?
Yes, I can hear you.
All right, thank you very much. So your question is, how can financial institutions and fintech redesign onboarding journey to be radically simpler and more inclusive, particularly to the less digitally literate entrepreneurs? We can also take a word from the keynote speaker, when she said, if we treat these SMEs as just mere users, we build nice apps. But if we treat them as economic enablers, then we have to build infrastructure. So, Robert, how can we redesign our models to be able to help these SMEs to be adopted digitally? Thank you.
Okay, can you hear me?
Yes, we can hear you.
Okay. Now, I think one thing, in order to approach this question properly, let me first talk about what onboarding is, because we need to appreciate what onboarding really means. For many of us, we designed around institutional requirements rather than customer behaviors. What do they really need? As the keynote speaker said, a woman selling fresh produce in a market, say in Owerri, or a trader in Kampala, or a refugee entrepreneur somewhere in a base camp, they may process thousands of dollars worth of transactions every year, employ people, but what they lack are those records, the IDs that banks really need. Even they might lack an email address. But one of the biggest lessons from East Africa is mobile money. Millions of people joined the formal financial system, not because of the products, but because the onboarding process was very simple. Just a simple phone number and an ID, and then a neighbor who is a merchant, a trusted agent nearby. So if SMEs become ecosystem, an ecosystem infrastructure, then it will work for all of us. I've just listened to the presentation by OPE. OPE's growth was not driven simply by having a mobile app or a mobile application. It was driven by creating an ecosystem of agents, merchants, local businesses that became trusted onboarding and service points within the communities. So that gives us a simple lesson. People trust people first before they trust platforms. And at Ugaford, we are also seeing similar opportunities by digitizing village savings and loan associations. Like in Nigeria, these are called Esusu. Historically, savings group made under a tree, made did records in a notebook, but today we have digital platforms, and these are created out of the behaviors that people are used to. So they see these things as simple. So to summarize, traditionally, KYC used to ask who you are, but now what SMEs are bringing to, as they become creators of digital footprints, they are participants in the economy. So we are asking SMEs to participate in the economy. And we have seen these examples across the world, in India, in Mexico, and also in Kenya with the M-Pesa. So finally, if onboarding requires an entrepreneur to become a banker before becoming a customer, we have already excluded
into the system. Now we're moving over back to the financial or the funding issues that we're having. And we notice that access to finance by these SMEs is really a big barrier. Taking into consideration an example from the keynote speaker, the Amaka story, who was not able to access finance from the bank. And Chika also gave us an example of another player that could not get money and all that, meaning that it's really a big deal and a big problem among the SMEs. So I'm taking this question to you, Mayowa. AY, sorry, not Mayowa. So the question is, beyond traditional lending, what innovative financing models hold the greatest promise to closing SME funding gap across Africa, beyond the normal traditional banking lending solutions that we have today? AY.
Okay, thank you very much for that question, moderator. Okay, I think it's good to say good evening, everyone. I'll try and keep my answers very concise. I think the problem statement has been well enumerated in terms of the challenges that MSMEs face in getting access to finance, lack of documentation, financials, all the information required to lend to MSMEs has moved from ledgers, Excel sheets, notebooks to online platforms. And financing needs to be tailored in that line. The MSMEs don't have collateral. They don't have all the requirements that conventional lending requires. And that is why it's very important to start to really push alternative credit scoring for lending to MSMEs. Again, over 90% of the MSMEs that we seek to fund are informal anyway. So they don't have all these requirements. And the best way to finance them is get information from alternative data, their credit bills, water bills, electricity bills, text messages on their phones, all data, payment data on alternative channels, and build that into a model where we can score them and lend to them. Part of what we are doing at DBN, just to quickly mention, is we're working with the World Bank and other stakeholders to create an alternative credit scoring platform. We had this session sometime last year, I think March last year. We had over 400 financiers on that call. I moderated that session. It was a World Bank session, and we all agreed that something needed to be done. But again, you see that a lot of the smaller players, microfinance banks, do not have the capacity, the funding capacity, to build those platforms on their own. So we are taking that charge. We're going to build that platform, and they can come there, profile clients, and lend to them. Part of what we would do is also to support lending on that platform with de-risking instruments. So we're going to apply our guarantees to catalyze funding uptake and lending on the platform. I'll stop here. Thank you.
Thank you very much. So you're collaborating with what the keynote speaker said. It is not just about building a service or a product. It's about building it with the users. So it becomes an infrastructure that they will use, that they will understand, and they will adopt it. But then, you see that there are a lot of apps out there, and we also have a lot of these SMEs that they are aware. Today, if you go to any market, all the markets today, you see POS is flooded everywhere because they now understand. I remember back in the days when we used to push POS adoption through the bank, how difficult it was for us to, extend these services to the merchants. But today, it is no longer like that. But apart from POS, and we know that most of these SMEs, they are already aware of digital financial services, yet adoption still remains low. Because when we're talking about this adoption, we're saying it's not just about POS machines out there. What practical strategies can fintechs, banks, and ecosystem players implement to move SMEs from awareness to active adoption? Even with the POSs that are flooded out there, if you go to the markets, you see some of the SMEs, they will tell you, no, I don't collect transfer. Transfer it to my neighbor, I'll collect it from him. Meaning that they know, but yet they have not adopted. So this question goes...
Today, 4 or 5 years ago, it would have been completely difficult for you to go into a market without cash and try and buy something versus now. With players like PalmPay, for example, OPay, MoneyPoint, deploying POSs and even allowing people to receive money on their phones, right? So you walk into a market today, everybody has one of these 3 banks trying to use it to receive money. That shows that everything is not just based on the ads, but it's based on the fact that a trader in the market has their neighbor who has actually used one of these apps to be able to receive money, and it worked 100% on the spot. So I can go into a market today without actually taking one single naira, transfer money, receive my goods, and the seller is happy on their own end. Another approach is also, from my perspective, I mean, we said this thing with multiple apps coming out and not being able to find a lot of these businesses halfway. I think the biggest challenge is also understanding what their challenges are, right? There are already existing rails. Why can't you just build on top of these existing rails instead of building something from scratch? It's a massive struggle for you to get a business owner or a small business owner to move from one platform to the other because they are trying to juggle, let's say, inventory, for example, or they are trying to juggle invoicing. Why can't you just build these rails on top of already existing banking transactions or banking platforms? And this also allows even those financial services providers provide credit to these businesses, because now I know how much stock you have in your inventory for me to be able to say, I want to give you money to lend against that. I know how much transactions you are doing. I know how many invoices you are sending out on a month-to-month basis. Those data points help those small business owners be able to receive better credit, to be able to sell better, to be able to receive money faster. And the entire rail sits on one particular platform versus having to juggle 4 or 5 different apps. And the third one, right, is also from an let's just lay off the advertising and just focus a lot more on finding these businesses halfway, finding these traders halfway. Traders are also concerned about, and this is one conversation that I had with a few people as well, because my own business also leverages a lot of these small businesses. They are worried about like taxation, for example, right? So people don't want to go, they still want to stay informal versus going formal, right? So they're like, oh, I would create my CAC today and then the government taxes me. And these are things that require a lot more deeper education versus just the shallow stuff that you do on billboards or you do on Instagram or you do on any of all these apps. There needs to be a lot of deep conversations that go around, for example, how taxing can benefit businesses, how you as a business can, you as a business owner can move from being informal, receiving money in your bank accounts, to receiving money in your commercial or in your business bank accounts. You can receive higher credits just off the back of that, right? So those conversations need to be a lot more deeper versus the shallow stuff that is really going around right now. So I'll just stop there and we'll move on to the next question.
Businesses, they still face a lot of barriers. Talking about funding, talking about access to finance and all that. So I'm asking you, Dr. Wale, what intentional interventions are needed to ensure these entrepreneurs are not left behind in Africa's digital transformation journey?
Thank you very much, and good evening, everyone. At least everyone left here. I think I'll just follow on the conversation with all the other speakers. Women and youth-led businesses, they account for that percentage which was shown by the keynote speaker. And I dare say that when you support a woman-led business, you do support an entire ecosystem and a whole community. There are several things that can be done, and has been proven that having access to these financial services is not enough, and this has been demonstrated. The marriage between enterprise development and true financial inclusion is what truly leads to sustainable growth. And there's so many things. And I'll give an example. In the last 5 years, the Enterprise Development Center had a partnership with the MasterCard Foundation on the Transforming Nigeria Youth Program, where we trained in about 700 local governments, about 250,000 women. What we saw, and I'll give a very quick story that helps to qualify this. What we saw is that for many of these people, just like we said, you mentioned earlier, they do know about these services, they are aware about all of these things. But what they see, or what their fear of becoming formal, is because of the perception they have of the complexity, the cost, and the non-immediate value of becoming formal. So many of them shy away from it. So it's important to, for many of the financial institutions to not only focus on providing financial services, but to also provide support, capacity building, most importantly. Now, in these 700 local governments we were, and these 250,000 women that we provided financial literacy, support, and advisory for, we've seen that after 12 months, we've gone to, after monitoring and evaluating, we've seen that many of them have created minimum 2 new jobs. And this shows that these people are truly the ones that can drive the economic growth that we want. So financial institutions need to not only focus on account opening as a whole. In the next 5 years, we want to support 750,000 women to bring them to not just bring them into the formal financial system, but to help them access meaningful financial solutions that can help them grow their businesses. Thank you very much.
Thank you very much, Dr. Wale. That tells us that collaboration is very, very key. It's not what one party can achieve alone. Yeah, there are so many things that we would have discussed along this line, but because of our time, I just want to give all the panelists just one word. In your own perspective, what is that single most important action you think that Africa should take to really make these SMEs the true engine of our economy? Just in 1 second. Let me start with you. Ewa.
In one sentence, thank you. For me, it's building their capacity and harnessing data to support them. Thank you.
Thank you.
Yeah, I think for me it's building platforms that African businesses trust, because trust drives a lot of speed of adoption for them. So once they trust it, they would fly. They would fly.
Chika?
Okay. For me, I think financial literacy program is very important, because for you to adopt digital payment or any product, new products, you need to understand it. So I think financial literacy program is very important.
Thank you. Doctor?
I think I'll just sum it up. It's really capacity building, because when you build their capacity, they're able to understand the financial tools. They're able to...
It resonated well with their livelihoods. So that trust, and also being able to build something that resonates with people's daily livelihoods will work for us. Thank you.
Thank you. You have heard it all from the panelists. It is not just about building solutions. Build the solution that the SMEs will trust. Use data to understand what is obtainable in the market, so that whatever you're building, you are building it in line with the need of the market. Ensure that whatever you are building is simple enough so that even the illiterate, even the least learned will be able to understand that. And not just build, ensure there are collaborations, because no one person can achieve this alone. Thank you very much. I don't know if we have any question from the audience. All right. Okay.
Thank you so much, Ma.
Thank you.
I'll be very brief because of time. So my question is simple. We've talked a lot about, granting loans to SMEs and how they are important to the growth of the economy. So my question is, why is it that these traditional loans company charge exuberantly, and it seems like there is nobody, that is controlling these charges. And I mean, when the director of Champs was speaking just now, when she was making that presentation, she spoke about the fact that, no, maybe she was not the one. I think it was the OPA guy that was saying something that the low income earners actually don't have issues paying back their loans. Done to actually curb these excesses, if you like.
Thank you. You don't want to throw it to anybody? You want to make it open? Okay, AY, maybe from
Mr.
DBN.
Okay, thank you. Maybe CBN will have been better suited, but I would just give my views. So it's a function of different things. One is the cost of funds for some of these lenders. Secondly is the risk grading of the MSMEs, and also the pricing regime of our environment, right? So most of the time, they will want to price along those lines. But for us, what we do at DBN, because now we've gone beyond just lending, we're a wholesale bank, right? So we lend to banks or financial institutions to lend to MSMEs. But now we've launched what we call our direct lending window to lend to aggregators and fintechs. And what we do is when we are giving these loans, we have competitive pricing for them. And we also say you cannot charge beyond this amount. So banks do have a responsibility to ensure that the MSMEs are getting a fair bargain, and that's what we do. In fact, even with the conventional banks, we have loans now for certain sectors that we give at 9%, and we tell them you can't charge more than 16. Some will say, no, we want to charge more. We say, no, you can't access it. So I think it's that deliberate focus to ensure that development partners, regulators are checking the lenders, whether it's fintechs, whether it's commercial banks, to ensure that there's fairness in how the lenders are being treated. Thank you.
Thank you very much. I know one person raised his hand.
Bora.
Just that last question, that's what we're taking. Okay, please go ahead.
Hello, good evening. My name is Victor. So I'm with Soso Software Solutions, and we're building a digital infrastructure solution, which is an AI-powered business and risk assessment platform. So, because we saw that the biggest problem in the whole SME ecosystem was not lack of capital, but was actual effective and efficient capital allocation. So, what I want to ask, and my question is directed to the DBN head. So our platform is Raduca AI, and it's a risk and business development assessment platform. So what would make Raduca AI a credible tool for business assessment for an institution like DBN?
Okay, thank you for that question. So what we're trying to build is a platform that will be, acceptable to our lenders, right? So it won't be just DBN building it. It will be us building for the fintechs, building for the microfinance banks, building for the deposit money banks, so they can come there and analyze their clients and lend to them. And in doing that, we can't do it alone. We need partnerships. So we're going to be partnering with a lot of tech companies, calling APIs and data from different sources. And of course, if we evaluate your solution and we think that it adds value to that lending journey we seek to achieve, then we can bring you on board. We have a full-fledged fintech desk at DBN that we started last year. We've lent to our first fintech already. We're doing more this year. So you could engage us. The fintech guy is sitting right around you, in front of you. So we can check out the platform and see how that works.
All right.
Thank
you very much. Last word from Dr. Wale to just give an answer to him from the entrepreneurship angle.
Thank you very much. I think one of the things that would make an institution like Development Bank of Nigeria adopt your AI tool, I believe that's your question, is for you to first of all validate the usefulness of your tool in risk management. Because for DBN to lend money to SMEs, they have to do certain risk check, they have to do credit check, risk checks, and things like that. How is your tool able to help them to achieve their own objectives? So a validation would help them to see truly how this can work. So I think what Ayo has mentioned would be good if you engage them and do a free validation that can help them to see how this can work. And I wish you all the best.
Thank you very much. So with this, we come to the end of this panel session. And let me re-echo, do not see SMEs as just mere users. See them as economic enablers. And when you do that, whatever you're building as a fintech, as a bank, as a non-bank or whatever, you build it to make sure that it meets the need of these SMEs and will be able to bring them on board digitally in the drive for digital transformation. Thank you very much.
Thank you very much, distinguished moderator, Dr. Chinyere Tony Oke, and everyone on that panel. It was quite an insightful discussion, talking about SMEs as the growth engine of financial inclusion. And I did like how Dr. Chinyere concluded that session. It's been quite a long day, and I'm sure your wait is not in vain. Apart from the knowledge that has been imparted, you also got to network, took in a lot, and the organizers recognize that and applaud you all. So I did announce this DP trivia earlier. So this is the second round. You could just use your QR code, scan, answer the questions, and you get a chance to win a gift. I believe they're bringing the gifts now. So the trick is you have to be here from the beginning to the end of the conference to enable you win the fantastic prize. Like I said earlier, it's a curated box of different goodies. Yes.
So let's reflect on how today has been for a minute. So as we prepare to conclude day one of the Digital Pay Expo, we reflect on a day full of bold ideas, meaningful conversations, and inspiring possibilities. Today, we explored the future of digital financial services, artificial intelligence and regulation, interoperable payment ecosystems, merchant digitization, financial inclusion, and the partnerships required to build a truly unified African's payment market.
Yes, and the conversations we started today must continue beyond this conference hall. Tomorrow is day 2, because the future of Africa's digital economy will not be built by institutions acting alone. It will be built by hosts.
I know.
Yeah.
I have my eye on one of the prizes, but hopefully we have them with us now so we can present them to the winners. Okay, so maybe we'll do that after
Okay,
this.
so just hold on a bit. I'm sure our director would help do the presentation, and then afterwards we'll take his closing remarks. I've been told we should just hang on for a few seconds. Please, if you're the gentleman or lady with the gifts, please, we need you to be fast. Thank you. And I believe you all deserve a round of applause for being a fantastic audience. Please give yourselves a round of applause. You truly, truly deserve it. There are people here that have been sitting from all the way since we started. And there you go, you can see your answers, your gifts rather. So,
We promise we won't keep you in suspense for too much longer. We are going to be giving out the gifts very shortly now. Okay.
So, who are the winners? So that's the leaderboard there, and the winner will pop up soon. So I guess I'm
Okay. So we might need our glasses for this one, but it seems like at the top of the leaderboard we have Comfy. Do we have Comfy in the audience? Can we have a round of applause for Comfy? Well done. You are the top of the leaderboard today. Congratulations. Please do.
Congratulations, Comfy. And from what I see in this goodie bag, it's enough for you to start a small family. It's quite a lot. So thank you to the organizers.
Let's give Comfy a round of applause. She is the top of the leaderboard today.
Okay. So we only have 2 gifts. Would you do the honors of announcing the second winner?
Well, since they say ladies first, I'm happy to do so. So the second winner of our grand prizes today is, drumroll, Reduca AI. Please do come and proceed to the stage. Reduca AI, congratulations.
Well, I was expecting an AI humanoid. So you exist in person.
You are a real person.
Congratulations.
Congratulations. Can we have a round of applause, please, for Reduca AI? And a huge thank you to our partners and sponsors who have provided these lovely gifts this evening for our winners.
Thank you. So I'd like to swiftly move on to the next agenda and to formally close day 1 of the 2026 Digital Expo. It's my pleasure to invite Executive Director, Intermac Consulting. Please applaud him as he makes his way to the stage to give the closing remarks. Mr. Toba Otusoya.
It's okay, thanks.
the day is really fast spent. So for those of us that are still here, I think we deserve a round of applause. Distinguished guests, industry leaders, regulators, esteemed delegates, on behalf of Intermark Consulting, let me start by thanking you for a very engaging and productive first day of Digital Pay Expo 2026. As we wrap up day one, let us take a moment to reflect on the conversations we've had here today. We started by looking at Africa's digital payment systems, specifically how different payment networks can work together, how AI can drive innovation, and how more people across borders can access financial services support to drive economic growth. Our keynote speakers laid the groundwork on policy covering regulatory challenges that come with using AI in payments, lending, fraud detection, and compliance. The power panel made one thing very clear: financial inclusion only works if small businesses have access to the right digital tools, embedded finance options, and credit facilities to fully take part in Africa's digital economy. Together, today's sessions have deepened our understanding of what it takes to build payment systems that are connected, smart, inclusive, and sustainable across Africa. Tomorrow, we will shift our focus to leadership, inclusion, long-term digital future, examining the governance frameworks, policy environment, and the next generation innovations that will define Africa's financial services landscape in the years ahead. We encourage our delegates to make full use of this evening's networking opportunities. Cross-sector dialogue and relationship building remain essential to driving systemic collaboration our industry requires. Thank you for your engagement and contributions today. We look forward to your continued participation tomorrow. Thank you, everyone, and good night.
Thank you very much, Mr. Otusanya.
Thank you very much. Just a quick announcement that I think the Red Tech Executive Mixer is currently ongoing. It's by invitation only, so if you have an invite, you might want to drop by. So, ladies and gentlemen, thank you for being a part of Digital Expo 2026 Day 1. On behalf of Intermark Consulting, our sponsors, partners, speakers, and organizing committee, we appreciate your participation.
Please join us tomorrow as we continue our conversations under the theme Inclusion, Leadership, and the Digital Future. Registration resumes at 9 a.m. tomorrow.
For myself, Benga Borough, I say thank you for being a fantastic audience.
And from myself, Datari Ladajo, I say look forward to seeing you tomorrow morning.
And safe travels back to your destination. See you tomorrow. Bye-bye.
Thank you.
Of all the numbers that matter in business, here's the one that matters most. 7.7 billion. Because that's how many people there are on this planet. So every day, we work with banks, merchants, businesses, cities, and governments to solve human needs with human ideas. Every capability we build on, every investment we make, and every partnership we enter into is driven by MasterCard's mission to improve people's lives. We helped make life a little better for everyday commuters by introducing contactless technology in transit systems worldwide. We're creating a more seamless checkout experience for online shoppers. We've developed new digital-first payment experiences, helped Lyft drivers thrive in the gig economy, made it easier for people and businesses to move money around the world, made transactions of all kinds safer and more secure, developed new artificial intelligence solutions that work for people, extended the reach of our real-time payments, and continued to pursue our vision of a global economy that works for everyone, everywhere. And we redefined the look, the feel, and even the sound of a brand that touches the lives of billions of people all over the world every single day. At MasterCard, we are here to help our partners help people, because we believe when you start with people, you can start something priceless.
My baba, they always say, for market, every day get your own wahala. Sometimes people go on scam you, but baba say, no be by gra, you must cool down, dey sharp, because with OPay payment, your money go enter sharp, no story. But inside market, anything fit happen. One day, we no see phone again. My baba remember OPay USSD lock, dial *955*131#. Baba press am, lock account. From market woman to driver, from small boy to big man. Now OPay, they protect people like us. My baba fit sell, press phone, collect POS, and still they teach me price. And when they don't tire am, go just tap OPay night guard. We no fear for this our hustle life. Now OPay be the people payment shield.
Confirm. Thank you, ma. Card don't finish, oh. Madam, we don't cast.
Not when I have Pompey. Finally.
With PamPay, your business never stops. Pay bills, send money for free, accept card payments, and earn up to 20% on your savings.
Boss lady. That's me.
PamPay, the smarter way to bank.